Meeting sends invites according to delegates.
This leader is provided to permit the projectionist to complete adjustment of focus and sound level before the film begins.
This stream is sponsored by Tick Strike.
Check 1 2, check 1 2.
Here, order flow futures.
Check 1 2.
Get a free trial at tickstrike.com.
See what you All right, grab your headphones. Woohoo, baby. All right, hold on here. Come on in. Close that. Here we go. Awesome. So check. Can you hear my voice right now? You can hear my voice? Is it really loud? Too loud? All right. Hanging out with Daddy today. Love it. You don't get to hang out with Daddy too much. Morning, Nino. All right. Let's get this show on the road. All right, I got some stuff I got to do here. Maggie do. Good morning. How's everybody doing out there? You want to look in the camera? Wave in the camera? Say good morning. Just say it.
Good morning.
Awesome sauce. All right. Just 1 second, Maggie. I have to I have a bunch of stuff in the background I have to do in the morning. Let's get right into it. Only got a couple seconds here. Go right into the stream here. Give me just a second, folks. I'm going to do some catch up here in the background. Catch up. Let me see here. Sort by newest. Customization. Subscribers. Any duration. Save. And then what do I got to do here? I'm all flustered because my baby is here with me today. Okay, good morning, everybody. Happy FOMC or not FOMC, but Fed Rate Decision Day. Let me go to Twitter. How's everybody doing? Good morning. Market up overnight, up 69 cents, baby. And no sell-off in the overnight. Anyone that held puts or put spreads in the overnight, are you going to hold through? I know some people said that they had re-upped again with farther dates out. See, ES, F, FOMC, Fed rate decision. Jerome Powell, baby. Live stream. Normally I do this in the background, but so I apologize to any of you out there for waiting on me here. Okay. Let's see what that looks like. All right, so coming into the opening bell right now, there's a bunch of stuff for us to talk about this morning. So you see, so Maggie, you see this back here? That's called Bookmap. We have a little bit of weakness in the opening bell here. Sellers do not want us to get above this hourly trigger right here. This is where the sellers are, just above where we are right now. The expected move today, I haven't done the daily trigger yet. I'll do that right now for you. Daily trigger is 408.87. We're going to talk about the VIX as well. And we got a bunch of stuff to talk about. 408.87 right down here. Draw a little yellow bar for you so you can see it. Hey, thanks. Good morning. Hello to everybody. My oldest daughter is on her way to what? Where is she going?
She's going to a concert in Chicago.
Oh, and what's the band that the singer's from?
BTS.
What's the singer's name?
Suga. What his
Suga.
but that's in their big group, but when he's alone, it's called Augusty.
Augusty, right? And Suga is he's kind of hot, right? They're both kind of hot. Oh, both same person? So anyways, hourly triggers right here. The expected moves today so far, implied move, expected move for the options market, 411.97, 415.49. So right here, okay? So this is all we got right now is here. And believe it or not, right here. This is what's the option market is saying. Though right here you're going to see sell side. Yesterday, if you look on yesterday's chart, on yesterday's chart, I had a yellow bar here. This is where the sell side was into that close. Something to note as well this morning, just going back, you'll see right here, declining, right? Sell, and right here they want to be selling again. Sell side wants to sell again down in here. Now the hourly trend, or there's a couple of things to note here. The first one on the 5-minute chart before we even opened here, we have a bull plane forming. So right in here, I'm going to show it to you. It's right here. So there is a bull plane right off the opening bell this morning. Let me see if I can change right here. You can see it right there. This white line's coming up, and the red line is underneath. And you're going to want to see price get above this hourly trigger, the white line and the red line to come underneath here, and price to start to squeeze higher. So there is a bull plane right here. It hasn't been disproven yet. I do have a question about some kind of a trap here where we squeeze up and we get rejected above here, where price starts to come above, and then there's some kind of a trap here where you're kind of locked in until that rate decision. That's mostly geared towards the VIX. So we're going to look at both this morning, and I want to show you both of those right now. So like right now, the setup on the open says to expect volatility, to expect a squeeze higher, here, and then an explosive move higher above. Now, with that being said, it's FOMC, where it's Fed rate decision day. Again, I don't like that. I like the idea of the expansion that we are looking forward to after today, whether to the upside or downside. And with all of that said, right? Hold on here. What just happened?
So some US regional banks drop. PacWest Bancorp down 2.6%. Western Alliance Bank down 2.2%.
We're going to talk about the regional banks, too. Everybody's panicking about the regional banks. I know that for sure. I've got phone calls coming in all morning about regional banks. I've got text messages all morning from people about regional banks. This is the VIX right here. This is where my concern is. I don't like to see... It's like this VIX is kind of shaping up for a ripping face higher. Like the VIX can come down here, get carried back up, and then begin to squeeze. Even if it rolls over here, as long as it finds that support on the hourly trigger, there could be like a fake out to the upside on SPY. The daily velocity is moving to the upside. The hourly velocity is to the downside overall. So hourly, we look bullish, right? On the day, it does not look bullish. On the SPY real quick, just looking at the SPY coming into, found its support on the daily trigger, coming into a cluster right now. The hourly trigger, the 1 and the 5 minute, says and this hourly here is showing itself as wanting to become bullish, right? Even if we're on a topping process on the daily, like every day,
So in 10 minutes,
we're going to start to become more bearish and bearish. There is this action above saying to look for a squeeze higher,
53 spot 8,
at least on the hourly. Now, with the Fed rate decision, like I'm not going to put that much. If we didn't have a rate decision today, I'd say, yeah, we're going to start squeezing our faces off. This would be a day where I would call my friends if I took the day off and was calling a buddy. They'd be like, yeah, expect a squeeze here at a trend day. Like, this is a perfect prime example of a setup for a trend day higher. But with us awaiting news, you know how these days go, right? You get all bullish, and then they roll you back down in here, and you're then trapped. There's a little bit of weakness into 130, 230. Squeeze up, and then we come back down, and then Jerome Powell gets all hawkish and all that kind of stuff. Now, saying all that, I've been having some interesting conversations about this selling here and what was responsible for this selling. And then someone had brought, I think VolWiz had brought up oil selling off, and it could be a harbinger of dealers hedging prior to the event. Bullish news. So you could see this selling in cash market here. Could have been dealers doing this. We didn't see volume selling. This could have been dealers trying to hedge squeeze higher today due to some unknown bullish news. I'm not going to predict that's going to happen. I expect 25 basis points, but if it's perceived as bullish, if there's a pause and not 25 basis points, this could be the action of dealers trying to hedge this ultimate outcome of a squeeze higher today. Seeing this selling into today makes me wonder who's doing it. I don't think it's institutions. I think it's a dealer. There's some validity to that. That they're going to pin this down into the rate decision today, and it's to quell the upside move, not the downside move. I'm not seeing this as like panic into. Personally, I don't see it as panic into the rate decision. I think it's hedging an implication that we're going to squeeze higher, that the market has a lot of money on us squeezing higher at this point. The options market is positioned for a squeeze higher. And we'll talk about regional banks too. I've got my phone's been I've been in phone calls all morning, and then I exercised this morning, and then I got text messages like multiple people about regional banks. So we'll talk about that as well. You want to say hi again? You want to say good morning again? Say good morning.
Good morning.
So I have my youngest with me today, if you're just joining us. My oldest is at a Suga BTS concert. The boys from BTS are from Korea. And as a matter of fact, Daddy served in Korea with your mommy. She was there with me, believe it or not. She was at a different base, but Daddy used to travel the entire country trying to chase her ass down, believe it or not. I shouldn't have sworn just then, but I shouldn't tell you that, but you know that? That's true. Daddy fell in love with your mommy there. And because they're from Korea, they have to serve their nation. And so I guess the boys have had to join the army, I think. And so they're touring separately and releasing. Aren't they like releasing albums and stuff, like solo projects? And one of them put weight on, right? He went to basic training, and he got muscular, didn't he? They were all skinny. Mm-hmm. You want a microphone? I'll get you one. You sure you don't want a microphone? Hold on, let me see if I can find you a microphone. I don't know if I can plug one in here. Didn't I have a microphone for you before? I did, didn't I? Watch toast. Hold on, I'll set you up with a microphone. Let's see if I can get your mic set up. See if we can hear you talking.
With a range of 53 spot 8 to 53 spot 5. The US S&P Composite PMI final forecast 53 spot 5 on a prior of 53 spot 5.
I don't know if we're going to get this going, but talking to the microphone, let's see if we can hear you. Nope. All right, so hold on here. Let me hold on a second here. It is warm in here. See if you can crack that door. It is really warm. All right, microphone. Okay, microphone. Mic check. Say something again. Nope, I can't hear you. Let me see if I can create a microphone here. See if I can add a microphone source here. Source. Audio capture. Okay, add source. Nope. Add a different source. We'll name it Maggie. Maggie microphone. Let's see if we can find it. Device. Nope. HD 60. Nope. Camlink 4. Oh, wait a minute. Hold on a second here. All right, say something again. Talking on the mic. Nope. Say something again. See if I can. Okay. Say something again. Say mic check. Yeah, I don't hear anything. Yeah, hold on a second here. Monitor off. Sometimes, Bear, I can't. Hold on here. Okay. Say something again. Nope, can't hear you. All right. Not going to work. We'll just have you jump on the mic every once in a while, okay? All right. Let me check the back of the microphone. I'll work on this when I have a moment. Oh, yeah, give me that squeeze, baby. Give me that squeeze.
One minute remaining. I'll lead the US S&P Services PMI final.
Hey, Winky, good morning. How are you doing, brother? Morning, YouTube. How are y'all doing? Hey, Bebop. Hey, Willie. So look at the chat. Will's saying good morning. You want to say good morning, everybody?
Good morning.
I gotta figure out how to get you on the microphone here, and I don't know exactly how to do it.
10 seconds.
Yeah, I might need a new. Let me see if I can figure this. I don't know why the I don't know what's going on with the mic right now.
Spot 4, lower than the forecast to 53 spot 5.
You know what it might be, Maggie? I might have figured it out. Hold on. I might have figured it out. So we can get you. I think it's because I'm using a. Let's try this. Cable output VB audio virtual cable. Try it again. Nope, still can't hear you. Try it again. Nope.
This stream is sponsored by To The Tick. Get free daily pivot points, Fibonacci, and market profile levels by signing up at tothetick.com.
Yeah, that's not a... All right, I'll figure that out later. I figured it out last time you were here, and I don't... You like what? You like the bear?
And we have posted at the US S&P Services PMI April 2023 full report. On
That's Becky Quick.
Are interested.
She's a CNBC anchor, and she, a friend of mine, Chaz, and I were making comments one night on Twitter late night. We were discussing who we liked the most on CNBC, which is a TV network that does financial reporting. And she got onto Twitter and said, "What are you guys doing?" And we were like, "Uh-oh, busted." And we all ran. And she, so I use her as it says stop swearing. Hey, yeah, Stacy's saying good morning. Harushi's saying good morning. Eugene Park, look over here. Right over here, you can see these people all saying, you can actually see them right here. They're all saying good morning to you. Yeah, so we got Maggie. Can we get Maggie prediction on up or down? Yeah, definitely. It's a good question. So, Maggie, you're being asked for a prediction. So, all right, I want you to see this, Maggie. Look at my screener right here, okay? Watch right here. Everybody wants to know if we... So right where you are right now, you see, watch me, I'm going to paint this for you. See right here? Do we go this way today? Or do we go this way today? You're going with up today. Okay, you're just like Daddy. You're a bull. Come on over here and say what your prediction is.
I think it's going to go up.
All right. You're not like your mother. You're not a bear.
Everything goes downhill for her.
Everything goes down. Oh, say that in the microphone.
Everything goes downhill for her.
Oh, you're just like your daddy. I love it. Don't ever tell your mom that. She'll be mad. My daughter says that for my wife would have said down. It's terrible. Just like your dad. I love it. Excellent. Squeezing up right now into the hourly trigger at 412.21. I was positing yesterday that you could see if I was a sell side, I'd be some of the way Timoros was talking in that article, man. I'd be scared that there were hedge funds in that article. It's quoted saying the Fed must be hawkish even if they're going to pause. Like that was basically a plea saying you have to be hawkish because this market will explode higher. So I'd be worried if I was sell side. I would. Dow trading 411.92 right now, up into the hourly trigger on the SPY. We have to get the Maggie indicator, right? You know what you could do is, they're asking for an indicator from you. You know what you could do is like ask Maggie once a day, up or down, or have her roll a dice. It'd just be like it'd be like the goldfish indicator. Wasn't there like a goldfish indicator on Wall Street Bets back in the day, or a lizard. I think it was a lizard. There was a lizard or something they used, or a goldfish or something back in the day, Mags. And they would like ask the lizard or ask the goldfish what they thought. And I think the goldfish had like higher returns than anyone else.
And services prices paid, so a prior of 59.5.
Oh yeah, baby, get that squeeze on. SPY now trading on an hourly trigger. We had the 5-minute bull plane, baby, coming into that 412.15 right now. We'll see if the market can get above. We'll take a trade today together. You want to trade some money together, make some money? All right. Uh-oh, I've got some error on YouTube right now. I've got some Are you guys having any any of the YouTube viewers, are you having any lag right now? Because I might want to reset my video stream or my router so that we're not dealing with this during the middle of the day here. Anyone on YouTube experiencing any streaming difficulty right now? Look at that nice squeeze right there. 412.24 right now. YouTube's working fine on your end? Yeah, my stream health is poor. Okay. Let me know if at any point. Oh, 412.36. Squeeze it up, baby. Now we've got the 3 trigger. So I'm going to go shit post on Twitter right now. Oh, boy. 412.65. Yeehaw, daddy. We should have taken that trade together. R1. Woo, way up there. 414.50. And there is nothing back here. Return to the scene of the crime. There's nothing back here. Nothing. Just clear skies. Even though you see that bar down here, that sell bar right there, there is nothing but blue skies above. 412.65. Woo! Say woo doggy.
Ooh, doggy.
Wow. Nice little squeeze there. 412.65 on the 1 minute. Look at that. Blast off right there. Just ripping. Gorgeous 1 minute right there. Absolutely stunning and beautiful. $412C is printing $2.15 on that trade. Ooh. This is a 5-minute chart.
According to congressional aides, the U.S. Senate is to begin work on new legislation to strengthen export control laws and identify new sanctions to counter China.
It tells us breaking news. And then over here on this, so on this screener right here, Daddy goes through and reads the news off to people on this one right here. And then I read the news off over here. U.S. PMI services flash 53.6.
10 a.m. Eastern Time, we get the US ISM data, services PMI forecast 51.8 on the prior 51.2, with a range of 53.5 to 49.8. Services employment, prior 51.3. Services new orders, prior 52.2. And services price paid, prior 59.5.
That's at 10 a.m. ISM services. And then at 2 p.m., we have the Fed Reserve interest rate statement. And then at 2:30 p.m., Fed Chair Powell presser. I'll tell her, Johnny, in just a minute, brother. Oh, what did I mean on March 10th tweet? This morning I was looking at the short interest on AMD. Yesterday, when AMD reported yesterday, their setup looked better than Starbucks to me. The selling, I know that you guys are all out there going to be like, yeah, they had horrible guidance and that's why they sold that much. But I was like, I don't know. I was like, I just want to make sure that in yesterday's stream at the end of the day, I was like, my only concern into yesterday's, at the end of the day yesterday at AMD, my only concern that I had was the short interest on AMD. When I had looked back on that chart for the entire year, I was like, this looks like it's being traded. Like AMD is being traded. So I was like, and then when they sold off yesterday, I was like, I want to go back and just look at their short interest, days to cover, and the numbers on it. And they kind of match up back to March 10th, 11th, 12th, 13th, somewhere in there, and their days to cover. And so I'm fascinated in AMD over the next like a 2-month call on AMD here, right where it was at before the open this morning. 2-month call to print in 15 to 18 sessions. My only concern with that trade is, of course, market conditions, right? We know that we're kind of in a topping process on the market right now. It's rotation down with the daily velocity at least. So that's the answer for that. Be sure electric car is fully charged. Okay, the bull's gonna need a nice jolt around 2:30 today. Morning, Foresight Finance. How are you, brother? So you got our squeeze up to the hourly trigger. I'm going to take a look at the SPY right now. We have not traded over it yet. We need to trade. Right now, price is exactly on. Let me give an exact price here. 412.19. Price needs to stay above 412.19. Cannot be below it. So it has to stay above 412.19 for a move higher. You're going to pay attention to the 5-minute here. Watch this 5-minute. I want you to keep your eyes on this white right here. And if you want to take the trade once more higher, you're going to watch the bars. And you want to see the bars confirm another move higher here. If price begins to break below the 5-minute 27 EMA, this is where your stops are down here. And this is also where you would buy right in here somewhere. So we'll see if we can continue higher here. Let me see if I can do I don't know how to do, I need to do how do I do so on my end, on the multi-stream, I can't seem to begin I don't know how to start question or a poll
51 spot 9
on
51 spot 9,
Streamlabs on my end. I don't know why.
spot
For
8,
both
39
streams.
spot 8, 59 spot 6, 59 spot 6, services new orders 56 spot 1, 56 spot 1, and services employment 50 spot 8, 50 spot 8.
I want to do a poll. ISM services PMI actual 51.9. Forecasts was 51.8. Previous was 51.2. I'm watching this, so I'm watching right now this, I want to see if I can catch this trade higher. I'm not in a 0 date yet. UNG, hold on. I have a guest coming on this morning for you too, so we're gonna have a little discussion today. Oh, UNG, man. Almost there, brother. Let me check the 1 minute on UNG. No. It's close. Are you thinking about buying UNG or calls on UNG? It's close. Right, like at this moment on UNG, you're looking for it to get above $6.27. I'm going to give you three numbers. You want price to, right now at this moment, you want price to get above $6.27. $6.33, and your target right now is $6.52. Next target above is $7.02 on UNG. It's close. It's something I'd have to watch in real time. It's real close. So I'm waiting to see what happens here on SPY. I want to see what this interplay is. I want to see if it can get back up here. And this comes up here. Something like that.
So we have posted out the US ISM Services PMI April 2023 full report on the newsfeed for those of you that are interested.
See that 4,000 down there? See down there on Bookmap? Standing orders down below, right here where my cursor is. I don't like that. There's 410. You can see all this supply right here. So that translates into, there's a hedge right here, right? You can see it. It's a 1 minute chart right now. So I want to see price hold. Like that. That's what I'm looking for. And try to enter into something here, but this is risky too right here. I haven't been liking trading these days. Like these days, like I'm not like I've been doing so well on. I've been doing really well on like reaction trades, and so like let's talk about thesis here. Like I love buying like dips. I like buying when, I like buying trend days. I like buying, oversold conditions on the daily, like major oversold conditions. Intraday stuff, like I don't like getting chopped up in here.
Josh Frost says June 1st estimate for exhausting extraordinary measures is the best estimate for looking at tax receipts. And adds the actual date for not being able to pay all obligations depends on the realized receipts and outlays.
Presser's at 2:30 or 2 p.m. Excuse me. There's the presser, or there's the release, and here is the 2 and 2:30 p.m.
This stream is sponsored by TickStrike. TickStrike allows you to actually hear order flow in futures, forex, and stock inputs. Get a free trial at tickstrike.com.
All right. UNG right now catching a bid. I'm watching it on the 30-minute. So see if I can bring you. I'll bring you over to. So someone's concerned, or not concerned, but someone wants to trade UNG. So let me bring up UNG real quick. This is the 1 minute chart for UNG. Hey, sweetheart. Did you go do your thing? What you had to do? Let's see if I can slide over a little bit. I'll scooch over for you. So this is the UNG chart. What you want to see here on UNG, if you're out there and you're whoever you are that was asking about UNG, we're going to talk about it right now. So on UNG, what you want to see to take this trade is price get above $6.25 and then $6.31. And even then, right? And the reason why you're doing that is you're looking for price to, let me see if I can show you this here. What you're looking for here is for price to work for you, right? Like you want price to do the work for you. You don't want to be guessing Like, hey, do I buy like so on UNG specifically, like it's called the Widowmaker for a reason. You're gonna get this tool eventually, and you can sit at home or in your office. You can trade UNG whenever you like. Now, on the 1 minute chart, we are at the bottom. Not the bottom, but you can see down here we're at minus 16. It can go lower on a 1 minute chart. It can go down to like minus 25, minus 50. We're at the bottom, though, on the hourly at least. The hourly is looking kind of nice. We're almost there, right? Watch my cursor over here. I'm going to show you what happened there. And you can see this nice squeeze up on UNG, right? Boom, boom, boom. Squeezed all the way up to the hourly. So it's not like we can't squeeze here, right where we are. But you want some confirmation first. This is a key thing. This is a lesson for you. If you're out there watching me right now, this is a lesson for you. Price right now, this is for anything you're trading. So watch the price that I'm showing you. See price here? Price is below the 1 and 5 minute here. Do you see that? So you can't be just like, oh, I'm gonna fucking buy this here. Oh, sorry, I can't swear. Did you hear that? Okay, she just gave me just had like the biggest eyes in the world when I said that. All right, I'm sorry. I apologize. Daddy has to like bring over the stop swearing sign so I can just stare at it all day long today. Because if you're gonna be here with me, I have a whole persona I have to live up to on the internet. You know, right? Hold on. So the idea here is this. The idea here is that oftentimes there's a few things you're looking for if you're trying to buy a dip. Okay? And now UNG specifically too. If you're trying to buy a dip, there's a few things you're looking for.
But aren't able to confirm or validate its authenticity.
You're looking for a flattening of the 1 and 5 minute. Like not a vertical down on the 1 and 5 minute, but a flattening. You're also looking for a cross of the 1 and 5 minute. Right? So you see this cross right here? That looks good, right? So that's like your second thing that you're looking for, right? And then you're looking for price to get above. That's the third thing. Write this down. Get yourself pen and paper. Break out a notepad. You're looking for the white line to cross the red line. This is a 27 EMA and 113 EMA on whatever chart you're using at home. Did you get that thing for Daddy? Where is it? Bring it over here. Daddy's going to stare at it, so don't swear. This is the first, like the number one. Do I get the cross of the white line over the red line? Number two, is price going above the white in the red line? Thank you. We'll show everybody. Do you guys see that right there? That's my girl Becky Quick, and she's saying, what is she saying? Jim, stop cursing. So we'll put it over here for today, so I can just stare at it. Yep. So I don't want to lose it. Okay, Jim, stop cursing. So you're looking for you're like, okay, check. White line is flattening. That's number one. Number two, white line has crossed the red line. Number three, price is over the red line, the white and red line, right? Then you're waiting for your last thing. You're waiting for price to confirm the move higher. That would mean a price check on the 27 EMA. I believe at home it's on a 5-minute chart. If you're not using this, and then and then the beginnings of a move higher. So you set the trade up. You don't hit the buy button until you have a confirmation that we're ripping higher. And then you're looking for prices above, some targets above, right? That's your hourly, your daily trigger, what have you. So just on UNG right now, you're looking for a couple things. You can just visualize this at home. You can say, okay, I want to see that happen there. I want to see this happen here. As a matter of fact, I've got a predictive lines that actually do dots and stuff that'll actually predict this before it happens. We're going to get those too. But now you want to see price come up here, come back and confirm, have the trade set up to go long, and then once it goes up, you have a defined target, right? Right around 635, 645, 650 $6.20 to 650 right? And take the money and run, and then wait for it to consolidate above and go to your next target of $7.20. Make sense? Now, you have stops below this number once you enter the trade. Price breaks above, you want to get in your trade. You know that your stops are down here. You know that if there's not a liquidation break, but if price begins to get underneath and reject, you know to cut your losses. You're not just like taking a trade and then saying, I'm going to stay in this trade. Because if your thesis is wrong, well, first you're going to posit a thesis, and then you're going to look for that thesis to play out. And if at any point you're like, shoot. I almost said it, I didn't say it. Shoot. You know, we're actually going to, this is a trap, we're going to reject and go down. You know that your thesis is no longer valid. So it's not like you're going to say, yeah, I'm going to take that pain and lose all my money. If anything, you take 10, or not 10, but you take, 3-4 cuts with these setups, and that 1, 2, 3, 4, 5 that actually hit are going to print huge. You take 3, 4, 5 cuts for a major payoff, 300%, 100%, 500% payoff on this happening. And even then, for where we are right here, you could even be more conservative, allow price to come up and above and these crosses to happen, price to confirm, and then once you get to this hourly, if you see price squeeze up and then come back down and you see the white and the red line come up, that's a 3-trigger cluster. That's even more bullish to go to the upside, right? So you might even want all of this to happen first before you enter. No, not 30 seconds. I don't want to do 30 seconds. I want to do 30 minutes. So even on a 30-minute chart here, for this trade, it already took place once, right? If you want to take this trade again, see how right above at that hourly, you take the money and run here, right? So you're like, look, you down here, you make this trade here, you get the back test, boom, we're off and running, squeeze up, take the money and run, and you would have waited for consolidation and confirmation that we're going higher for the second part of your trade. So you got first part of your trade and then second part of your trade higher on UNG specifically. Now, if you wanted to be like, yeah, I'm going to own a UNG, I'm going to buy the actual $6.20 UNG, you still want to wait to buy it until it gets above the 1 and 5 minute chart. You don't want to just get on that trade and then begin to lose money without any kind of exit strategy if you're losing your shirt on it. Does that make sense? So even right here, I was asked in stream a few moments ago, are you in calls? And I said no. And why did I say no?
Fear and greed index 64 out of 100, also signaling greed.
Why did I say no? Because I said to you, well, first I said we got a bull flag back here, a bullet plane back here for a squeeze, right? And then I said to you, I want to see price and how it interacts with this 1 minute here, right? Or this 27 EMA, and this is a 1 minute chart. I got the wrong chart. Hold on. I wanted to see on this back test here, does it hold the 1 minute or not? Is it able to get above? Is this 5 minute EMA going to carry on to the upside here underneath? Is price going to stay above the 27 EMA and the 5 minute, right? So do I want to risk? I want to take my money up here in that squeeze, and then down here, I'm looking for continuation. I don't want to get chopped up in here. I don't want a reversal getting sent to the downside and getting all fucked up. Oh, sorry, I stopped swearing. Damn, did it again. Probably have to kick you out of here at some point. So do you get my point here when you're trying to take these trades? And the crazy part about this is all of this consolidation that's taking place in here, you're like fighting for pennies when this move is likely huge, like it lasts to 414, 415, 416, way up there, and you're just trying to fight for this like all this nonsense in here, you know? And meanwhile, you've got dealers like tinkerers, like gremlins, and they're like sneaking in and they're going, oh, we got this guy over here and he's got $2 calls. We're going to now turn them into $1.25. We're going up, but before we go up there, we're going to reprice his calls that he's got.
Crude oil stock change came in at -3.939 million.
I don't know. Does that make sense to any of you out there? Might just blabbing. Maybe I'm just blabbing here. Yeah, I'm gonna need cuss words. I don't think I've sworn that much at this point. She's got her headphones on, so I don't know if she can hear me, but uh-oh. Man, that VIX, dude. Look at that VIX over there. VIX is gnarly right now. VIX is counter to the squeeze higher right now. I've got two. I've got hourly velocity and then hourly trigger. If you go into Trading View, you can look up indicators and you'll see triggers. That's right, Johnny. You guys are all on check, huh? You want to run that? Let me run that thing right now for you guys. The stock tracker. See if we got any. Oh, we got some today. We got two. We got two. We'll see if they're worth it or not. Hold on here. We do have two charts popping up this morning. I still don't like either of these. Well, how about this? We'll talk about two tickers right now. Oh yeah, look at that, baby. SPY squeezing. We're gonna look at two tickers right now, okay? We're gonna take a look at two tickers. Exponential Fitness. 1 day chart. I like these tickers. That thing is beautiful. I love it. This is going back to July of 2022. Love this ticker. Just keeps going higher. I don't like it right here. So I wouldn't normally tell you about this ticker. You know what? They'll probably sell it now that I'm highlighting it. Beautiful ticker, though, huh? Just runs up higher, and then you just buy the dip. Goes up, buy the dip, buy the dip, buy the dip, buy the dip. This thing's got great fundamentals, too. I would not buy it here personally. But, you know, some are set an alert. If you have enough of these tickers, you have like a basket of 100 tickers, I would set an alert down here for this gap down here. I'd set an alert at 28.55 and then one at 26.39. Beautiful ticker. Look at that. Look at that. It's a gorgeous ticker. XPOF. XPOF. You guys are always trying to buy dips or like catch fallen knives. This thing's been running like a dog since June of 2022. June. Just print, grind higher. Next one we're going to look at OSCR. You can do your own due diligence on these. But I want you to do that. Oh, look at that one. This one's gorgeous. Ooh. This is another beautiful ticker. IPO last 3 years. Real cash coming in. Guidance outstanding. Great ticker. $37. Look at that consolidation down here.
With a range of 2.9 million to -3.05.
You guys are always trying to buy dips, right? Forget dips, man. Don't bother. We'll catch them afterwards when it's starting to show signs of life. Look at that beautifulness right there. OSCR.
8 million on the prior -0.
There's one right there.
6 million. And crude Cushing inventories prior 0.319 million. Bear in mind that yesterday's US API crude oil stock change came in at minus 3.939 million.
Giant gap down below between 360 and 487. With that said, bull cross here. Giant bull cross on the daily to the upside. Two gaps above 760, 7.67, 9.255. Sellers being absorbed here. Sellers being absorbed here. Next target to wear out these sellers. Then you've got a giant gap above to $17. Make sure you're doing your due diligence on these companies, but I've already done the due diligence on these companies. So keep your eyes on this. Look at that volume. Look at that accumulation right here. Look at that big giant volume bar down there in this ticker. Who bought that? That wasn't retailers. That wasn't retailers. So what do you do here, right? See a new trend forming on it. Set some alerts down below. 437, 4.374. More alerts down here, 6193. This is another one. You just add this to the quiver. If you got like 100 tickers you look at, 2 tickers, throw them on your quiver and be like, I'm just going to, if it never comes back, if you get left behind and this ticker just keeps rocketing, leaves you behind, you lose out, so be it. But if you have 1,000 of these or 100 of these, this one's already moving. You're not trying to catch a knife. The knife's been caught. How long does this trend up for? Rest of the year? OSCR. OSCR. Bet you it's not even done. Somewhere in there. There it is, right? It's even better. OSCR. And that's the 2 that I have for you today. Always trying to buy dips so it's got something rolling over, and that's a gorgeous ticker. 2 gorgeous tickers. Oh, yeah, look at that dirty bear cross right now. Look at that bear crossing. Look at that blood right now. Didn't get caught in that, Maggie Dews. Daddy didn't lose money on that trade. Can I look at PTON? Yeah, I'll look at PTON right now. PTON. Ooh, PTON. PTON's bullish on the daily velocity. Not completely bullish, but it's getting bullish. The 30-minute chart. Hold on here.
Get free daily pivot points.
Man, PTON, dude.
Profile levels by signing up.
I hate PTON. I'll be honest with you, man. I'm not a friend of PTON. You want my sentiment? It's going to 0. I love you, croissant. You have a series of higher lows on PTON. Man, dude, trading PTON, I'm going to look at an hourly.
10 seconds.
Your one saving grace right now is that price is above the 1 and 5 minute trigger. The hourly trigger you're above. You're looking to squeeze. Your price target above currently on PTON is $9.79. Your next target above that is $11.27. 927, 1127. I'd call it flat at $9 and $11.
A build on the forecast of -1.5 million. Distiller inventories -1.19 million at -1.19 million. A draw on the forecast of -0.8 million. And crude Cushing inventories 0.541 million at 0.541 million.
Your big target above is $30.64, my brother. I'll give you those numbers one more time. On the top side, $30.76. You are on a trigger cluster right now, and you're above right now a 3 trigger cluster on PTON. Your 2 targets above are $9.77, $11.28. Then the big kahuna above that is $30, believe it or not. I don't want to comment on PTON because I'm biased. Yeah, I'm biased on them, man. They can squeeze because of shorts, right? Covering like a basket of stocks. It can definitely squeeze, but as far as a company, I'm biased to it going to 0. I was pretty upset at PTON. I gotta be honest with you. I loved PTON as a COVID trade. I was kind of enraged that they, during all that money that they made and that came in, that they didn't design and launch an outside bike. That they didn't just buy a company and say we're going to start building bikes for outside. Like the one thing PTON had going for it, in my view, was you had to have it, or a knockoff, but you had to have it. And then, and I ride inside. I ride a bike, an exercise bike. But I was like, I don't want to hear about any of your wearables. I don't want to hear about any of this other crap. I want to hear that you have like partnered up with some like Karen, stay-at-home Karen that's going back to work. That like has like Lululemon, Lululemon. Like I have to have that. I have to have a North Face jacket. It has to fit me perfectly. It's my mountain casual outfit. Like I have to have it. I have to have my Starbucks. I have to have my Apple phone. And then I have to have this bike because they teamed up with REI. And so when we reopen, I'm going to buy that REI, partnership bike, and I'm going to continue on with my PTON. Like I wanted to see that shit. And when that didn't happen, I was like, they took the money and put, you know what they did with the money? I can't talk about it. My daughter's here right now. Really, Parable Tom? I was so angry, man. Well, that was the thing that got me was, so like I've been through a couple cycles. What you can do on your, it's fascinating. Like summertime, we're slow. Like go through and look at companies that are like, they trade for like $1, $2, $3, $4, $5. Like what I call penny stocks are normally priced between $1 and $5. If you look at a lot of those companies, or if you've ever traded those companies, you do the research on them, and you're like, whoa.
Crude stocks in the SPR fell in the latest week to the lowest since October 1983.
You're like, whoa. You're like, this company. Oh, I got a good one for you. DGLY. I got a good one. I got an example. DGLY. They were, I think in like 2000, they were a part of the .com crash. And they were like high flyers. I think they traded like $150 maybe. Something like that. $150, $250, $300, something insane. And they were featured in Wall Street Journal, New York Times, you name it, dude. They were like pretty boy. And they became a $2 stock. And they now have the same CEO and a bunch of like 10 people working for him in this like D-rated office complex in some small town in Georgia or something. And they never became what they were promised to become. And this last COVID stuff, they had some interest and they didn't do anything. They were just like, yeah, we're going to take the money and run. And so, they're raking in with just what they need to keep themselves fat and happy. So when you look at a PTON, I'm like, okay, so that's a good comparison, because in COVID, you're like looking for these companies that are high flyers, and you're like, are they going to reinvest this money and transform into a product that people must have, a status product? And they didn't. So when I see that, I'm like, there's probably a fat CEO. Now there isn't. The CEO's changed, I believe, but there's like that they're just not interested. Squandering. I think we talked about, like, you'll see PTON in Walmart at some point, right? And then you'll see it in like the Building 19 or something, or they don't have Kmart's anymore. Big Lots. Then the dollar store. You'd be like going through the register at the dollar store, and there'll be like a PTON work at home. I don't know. They don't have videos anymore or DVDs. Yeah, stay at home Karen. You know who she is. We all know who she is. We all know who she is. We all know who that woman is. No offense to any of you out there that are. Yeah, I did. I wanted to send it back to the pink sheets. I was furious. I was pretty furious. It's like, what a waste. What a waste of a brand. So John Haggerty's saying, Dr. Copper, you guys all know who Dr. Copper is, right? Falling like the dollar, crude and various commodities. Our friend Tom at FXE says 370 level will preface serious market pullback, economic downturn. I think we get a pullback. I think we get 2 pullbacks in May. I think we get a pullback in June too. I just don't see the price. Or as of yet, I don't see the price. But yeah, I agree with Dr. Copper, man. Dr. Copper does not lie. We are on the top side. We are definitely in a topping pattern. But I don't know that we get the price that we're looking for. Copper would do that, though, right? Dr. Copper would foreshadow that. Major lows. Let's see if we can get my buddy on right now. If you're out there, we're gonna try to get Binky on today. So Binky, if you're listening right now, we're going to talk about regional banks. I was hoping I could get Winky on this morning, but I don't know if I can. I think Winky's busy today. But I had Binky lined up, and then I also asked Winky if he could join us, but he looked like he was busy. Oh, I see. I'm reading your text now, brother.
U.S. Secretary of State Blinken says...
So we're going to try to get Binky on right now.
I can make the trip to China this year.
I don't know if that's going to happen, though. I'm having like it says stream is healthy now. Okay. Stream is excellent. So let me see if I can get Binky on the show. Collab cam frame. Put Binky over here. Should we put him up? Well, yeah, it's because it's only going to be a collab cam. Start collab cam, yep. And then share video source. Hold on here. Nope. Webcam source. Nope. I want to show a picture instead. Main camera. Share source optional. Share source none. Main display. Okay. I think he's getting a main display sharing. Copy the link. And then I'm going to try to Let me see if I can. Add an image. Add source. New source. Add source. Browse. Downloads. I'm not seeing. I thought I downloaded his picture here. Hold on a second here. Hold on, guys. I thought I downloaded the picture that he wanted, but I don't see it. Messages. See if I can download that bad boy. Save image. Yep. Okay. Save. JPEG. Documents. Downloads. Why is that not showing? For some reason I can't use his picture. Okay, so for some reason I don't have a picture. So what I'm going to do instead is cancel. I'm just going to have him on, I think. Okay, hold on here. Okay, so Binky, I'm sending you a link right now to join us. See if we can get you on at least. Collab cam. I just sent you a webcam microphone source. Just like below will be broadcast to your guest. Okay. I just sent Binky a link on his DMs on Twitter. Yeah, not a lot going on right now, right, in the market? You're answering now? Okay, hold on. There's the, right there. If you're, Binky, if you're listening in right now, all you do is accept, and it'll show on my end. I'll be able to see you, I believe. Got an H line down below of 410.42, and then a daily trigger of 408.87. And then you've got S1 down below right here at 407.53. Oh, there he is. He might be here. There he is. Binky, can you hear me? I can't hear Binky right now.
Declines 10-year and 30-year are at today's lows.
Binky, can you say something to me? Hang tight here, Binky. Binky, say something to me, brother. I can't hear any volume on you, brother. Main camera, microphone source. Got it. Yeah, I need to hear you say something. The link dropped. I'll get you a new link here. Looks like we lost them there for a minute. Where's the collab cam? All right, let's see. He might still be there. Binky. Hey, brother. Say something to me. Yeah, for some reason I can't hear you. Say something.
Check 1 2. Check 1 2.
Oh, yeah, you're here.
Oh, cool.
I think people can hear you. Let me find out. Let me know. Introduce yourself really quick, Bink.
Hey, everybody in the stream. How you all doing? It's Binky G.
Can you guys hear Binky out there talking right now by chance? You can hear Binky? Awesome. Binky, I can hear you loud and clear, man. I kept your video off.
Oh, great.
Technical difficulties putting your picture on the screen, out of the picture that you sent me on screen. You guys know Binky from the chat inside of these Twitch and YouTube streams. You also know him from the Discord. A lot of you also know him on Twitter. Binky, what is your handle on Twitter?
On Twitter, I'm Sonova Debiche.
That's spelled, it's at SUNNOVA DEBEESH. Do I have that wrong or right?
You got that exactly right, man. Worst alias ever.
The first time I saw your alias, I was like, it was like when people send me the We Too Low stuff. Like, who is that right now?
Yeah. No, it's great, man. It's great to be able to join you.
It's good to have you on, man. So Binky helps us in the background. Binky is working in the background to present videos, content in the future, and he's been working on this diligently now for how long now? A month, 2 months, or something, right? It's been an ongoing behind-the-scenes project. You still there, Bink? Looks like I dropped him once more. Let me check his. Yeah, I keep dropping him. Keep dropping Binky in the background. We'll try this again. I think I'm having issues on my end. Let me send him another one. I don't know if it's his end or my end. If I'm losing the link. Almost a perfect tag down below to the pre-market low here. This is the H line at 410.42. We went to 410.51, not quite. Oh, he's back again. There he goes.
Yeah, Cap. I'm not sure what's up. I just get a disconnected message and then I'm off in the hinterlands. But the last thing I heard you say was, and yeah, I've been trying to get my video editing chops together for a couple of months and then been enjoying learning about that process and then helping come up with a little content in the future.
It's a lot. I had it wasn't a steep learning curve, but it was like, it took time to learn how to edit, make videos, take videos, all that kind of stuff. Took me time to become comfortable with it. But Binky's been working in the background doing that stuff. That's been what he's been doing, is trying to get us set up to do more content for people. And you now, I'm going to ask you. You mind if I ask you a bunch of questions, or?
No, go for it, man. I'm wide open. I got a couple for you too.
Sweet. So we've got some time, right? We know that today we've got 2 p.m. We've got the Fed rate decision released, and we've got the presser at 4:30. Let's just start at stage one, right? You answer as much as you want, but I know that you worked you don't have to tell anybody whatever you don't want to talk about. You don't have to. So if you just feel comfortable just giving basic information about yourself, but people like to know that we have an audience of a lot of retail traders, some professionals. So how did you get started trading? How long ago did you start to get into trade? Like, what got you into trading? Why did you get into trading? How long has it been? Who, what, where, when, and how?
All right. So bottom line for me, worked in as a professional for a number of years. And as I got closer and closer to a retirement window, I realized that I needed to supplement my income and then also leverage some of the investments that I made just doing the buy and hold thing. So luckily for me, and also a blessing and a curse, was that experience goes all the way back to my first really bad week of trading was 9/11. And a lot of younger traders don't know what happened then. But if you can imagine, every option position that you have goes to zero because they're not even sure if they're going to open the New York exchange. That's a brutal, in some cases, lesson in risk management, which we can talk about in another stream sometime. But
be a great conversation. That they now, what I recall is that they closed the exchange down. They were going to reopen it, and then they didn't, right?
Exactly right. And every day was a hit and miss on whether they needed to completely replace and recalibrate that. And I actually had a really close friend whose brother worked at Cantor Fitzgerald, and I got to hear, unfortunately, some of those stories too. And but anyway, that was
we should have that conversation. I was in the Army at that time, and I was sent to New York. I was handed a weapon that morning. That I was called in that morning, the moment it was going on. We'll bigger conversation down the road, but then I was in New York that weekend.
Yeah. So, and that one, I think we could have a good round robin discussion, maybe with a couple of other folks that were around that time, even if they weren't trading, just to be aware of the importance of market awareness. Because I actually, and I know from talking to you, you saw the entire world change in the dynamic of about a week. So we happen to be fortunate right now that we're not in an active kinetic war, but I'm glad that you talk about that stuff in the stream sometime, because sometimes that market awareness comes out of left field, and you do need to ask yourself the question from a risk management perspective: what would you do if it all changed tomorrow morning? And it's not just a way to sell subscriptions. It's like, what would your mitigation plan be for every position? And anyway,
to your point too, you said that you were coming into retirement and that you needed to become more lucrative in making money, and I think we connected closer at some point. And I think Winky talks about, I think a lot of people in our stream, Winky, Joe Donut, there's a lot of guys out there that I talk to like you, where, as a matter of fact, Joe's father was going through this as well, where you have outlets to, especially COVID, you want to protect your wealth, right? And you don't want to fall behind at least the rate of inflation, right?
Exactly right.
Time we expect comments from German
and the brutal reality of that is, even the smartest financial guys that I know, and I know some guys that swing a large amount of money, they are all in a variation, from my experience, of trying to figure out what to do when you were blessed, when you were able to lock in a 30-year mortgage, but now you're trying to figure out how to pay for $100,000 truck at an 8% interest rate, and the bank is offering you, I think they're like up to 82 months now or something like that.
It's
For
I
what?
think it's 10 years, or is it 10 or 12 years? Joe and I were looking at it a couple weeks ago. They just extended
Yeah,
it.
there you go.
It's like 10 or
There
12
you go.
years. I think like 10 years.
So-
I think. So maybe somebody in the comments will know. And
And so that's a perfect example where if you play forward that numbers, even if you're a great investor, you're just like everybody else and trying to figure out how to make sure that you maintain the value of that investment.
well, you remember
and then-
too, as we were cycling out of COVID, people were. I mean, everyone's like, where does the money go? Where do we put our money right now? It's like, do we go to gold? Do we go to real estate? Do we go to bonds? How do you outrun? Because we all know, if you've been through more than one cycle, and this is a key point for the younger traders and investors. As a matter of fact, I was talking to who I was talking about this on FinTwit. There's a big FinTwit with like 1 million followers, and we were having a conversation. It was a big FinTwitter, and we were having a late night conversation. And Justin, he's the guy from the FinTwit conference. I forget his name, Justin something, and we were talking, and we were talking about how, like, when the money comes in, right, when we're in a bull run, and you're like, I'm a great trader right now, I'm a great investor, look how smart I am, and I'm making all this money, and oftentimes, your first cycle, you're like, I'm just going to stay in the market, and then you find out that they're going to take it all away from you through no liquidity. Then you find out that also they're going to do tightening in the background, all this stuff that you want to buy, or through taxes, through interest rates, and then like your county comes for you and says, "Oh, you own this house, we're going to raise taxes on you."
Exactly.
Right, and so everyone wants their money. Then you've got the egg producer, you've got everyone is out there to take your money. The government, corporations, as money dries up, and of course you're like, I gotta try to. How do I protect all this money that I made in a bull market? And it's not easy, is it?
No, it's not. And to your point, and you and I connected, I think, a way back, because in 2020, I actually had one of my best trading years, like a lot of people did. But you were putting a few very good contrarian thoughts out there, maintaining a bullish outlook, but then also being realistic about where some of those touch points were going to be on that longer term average. And I had been tracking the 930 Keltner.
Yeah.
As a long-term trend line. And so I immediately had respect for you. And then you were doing enough shit posting on Twitter that I could understand that you were actually trying to help people. In some cases, they weren't even paying attention. But it was one of those, one of those things where, go ahead.
No, just to your point was that I remember Horst and I were trading individual tickers. And we were like, the bulls of these, like a bunch of tickers out there, and it was like December of something of 2020, and we were all wrapping it up. We're like, we're all out of our stock positions, and people were asking us into January of 2021, hey, are you gonna rebuy? And we were like, fuck no, sorry, I shouldn't say that. Well, I was like, F no, man, we're gonna hide out in the indexes, like. It's too sketchy at this point. And people are getting. I mean, there was a quiet bear market, right? That began right in the end of 2020.
And you guys, you and Horselover and a couple of other guys, I remember, and you've talked about them positively in the stream. Derek Coatney, we're all
Coatney too, right?
Yeah, and you guys were calling out contrarian trades, and what I knew what you were saying, because people were not aware of how bad some of those tickers, and I'm not throwing anybody under the bus, but Peloton being a perfect example of that, where the individual tickers just got blown out of the water. And a lot of the tech tickers, which I pay a lot of attention to just because of my history, they were ridiculously overvalued, and it was looking like it was not going to last. So that was a tell for me that you were a guy to pay attention to and listen to.
We had a like right now, like whoever's in the chat room right now on Twitch and YouTube, like it's like, yeah, you guys are all fine, but you don't, or a lot of these people in the chat room probably don't realize that there's 80% of silenced voices that got run over when that happened. They're just gone out of the market. They lost millions, $500,000, $1 million, $100,000, whatever it was. They're just gone. They're back at jobs. They got destroyed. And they're not in the chat room, right? They're gone. They lost everything.
That's right. And I see that in volume numbers on a lot of these tickers that you and I trade all the time, especially in the SPY volumes. Like yesterday, like we were talking about earlier, early session volumes yesterday were abysmally low. So that made it look like any movement was being driven by somebody in particular.
Hold on a second. I gotta say something again. And I gotta comment that my levels are off. Just say I sound beautiful.
Check. Hey, you sound beautiful, man. Can you hear me?
That's better. Here we go. There, I got my levels are off in the background here.
That's okay.
Does that help?
Yeah.
Is that lower for you guys out there?
This is a check test.
Binky, you want to give a you want to just spell out your handle on Twitter again?
Yeah, it's Sunnova, Sunnova, Debeesh. That's capital D, lowercase e, Beeesh. I'm a gargling on. Hold on for a second.
I'm gonna post his handle on FinTwit right now for all of you. Okay, if you're out there watching right now, I'm just gonna post his handle on FinTwit for him joining us today. So if you want to follow him. I'm going to post that right now.
Yeah, mostly on Twitter, just to set expectations. I do shit posting, and I'm a wallflower. I don't put a lot of financial intel out there because there are a lot of people that are a lot smarter about it. But in the Discord, I'm Frank the Bear, and just to give a brief shout out, there are some OG badass killers out there in the Discord, like your wife's boyfriend, E-Trading Shorts, Saul, Blind Nest Owl, Winky, John Haggerty, Morpheus, and between that and the live chat, when you're streaming, Cap, I've been able to continue to make money, which is an accomplishment in some of this market shop, and I've had a great time just hanging out with you every day that you're streaming, and whatever I can do to help, including offer bad ideas like we were talking earlier about some of the regionals. One of the good things about this group is people aren't afraid to share their opinions, and I think that's invaluable.
That's what I try to talk to people. I'm going to put a link right now into the Twitch and into YouTube for the Discord, and that is kind of the key, right? Is my Discord experience in the past has been I walk in, it's a pump and dump room, or it's really mean people like we're not going to tell you anything. And I think that was kind of the basis of our Discord is if you're serious about making money, if you're serious about learning how to make consistent money, that you get into the Discord. There's some professionals in there, actual professionals. There's some really intelligent, long-term traders in there. And if you just raise your hand and say, hey, I want to be profitable, I want to be consistent, I'm here to learn and make money every day. I think the Discord is a lot better than a lot of the Discords that I've paid a lot of money for to be in. Especially, you know, like we know we can shit post and talk shit and all that all day long in a Discord, but I do this. I think most of the people that have been around, hanging around for the past few years, we take it seriously. Like, this is my career, this is my profession, this is my future. This is how I survive out there. This is how I, pay for all this other stuff that I got going on. And so I appreciate you saying that about all those people in that Discord. They are a very serious group.
One of the other things that, just to pick up the thread, and I won't belabor the stream with too much personal backstory, but after that initial experience, I was digging out of a hole investment-wise. And so I actually kind of made my bones doing longer term swing trades, and actually was in a pretty good spot mentally when the GFC happened. And one of the things that I think you have to do for long-term wealth building, and this is back to the why am I active instead of just sitting on a pile of investments and not worrying about it, is my retirement account was managed by a large company that shall remain nameless. And I talked to their investment advisors about why they were making the portfolio selections that they were making. And then I looked at the monthly and yearly fees, which were comparatively low, less than 2%, less than 1% in one case. And they couldn't rationalize why they were picking what they were picking. And I realized that I'd be better off taking that 1% fee and paying myself, with the downside of, and you know this curse, having to pay attention to it every day. So
that's the curse, right? If you're going to manage your investments, you have to actively manage it. You just can't buy and hold forever, right?
That's right. And as my wife has told me many times, at least I'm trainable. The problem is that I'm also humble. I know that I'm not going to be an expert about the market. And if I'm trading my own account for my retirement, I'm basically working for an idiot who needs to get smarter every day.
What do you want to discuss? Just briefly, maybe, were you just like a buy and hold guy, or a buy and then take profit guy on individual tickers? Have you, now that you've become more active in managing your own investments, what's your trading style right now, or investing and trading style? Like, how do you trade right now?
Yeah, and so my primary focus right now is, and I think about it this way, I've got 3 bank vaults. Bank vault number 1 is the trading bank vault, and you talk about that bank vault all the time, which is you have a certain amount of money that you allocate for it, and you make that money work for you by doing day trades and short-term swing tradings. And then I take the proceeds out. I've had large enough account sizes where I made the mistake of leaving it all with the house. And if you don't pay yourself, then you feel like you're not doing the right thing for yourself over time if you don't get the returns you want. So that tends to make me, and I'm just talking about my personal investing, and it's just not financial advice, but that makes me feel like I need to work harder to make something else happen. And that's usually a mistake for me. So I take the proceeds out of the trading vault, and then they go into either a long-term vault that I'm just going to call it the set it and forget it, which is I take a subset of the dividend aristocrats, and I sell covered calls against those in a retirement account.
Nice.
That biggest risk there is not picking the right dividend aristocrats. And the second biggest risk there is not realizing that they go through cycles too. So I've been getting much wiser about sector rotations within those dividend aristocrats. And that is served me well, but that's taken a while to learn. That was the result of the financial crisis when, just like the regional banks that we might talk about a little bit later on, I was expecting a faster recovery in both real estate and in banks than happened. So it wasn't bad money, but it was dead, underperforming working money during that time period. And we've talked a little bit before. If you look at the chart of S&P and you look at the years between 2012 and 2016, the market was in slow grind mode. And the risk that you've got there is if you put on a longer term trade, like a swing trade, or you sell covered calls, you may not get the return that you expect out of that investment from keeping that
Supervisor
money tied up because the market just doesn't move enough. And I'm kind of thinking
at the
if the volatility keeps dropping, which I expect it will go up a little bit more here, just like you've mentioned before, that can be a money killer too. The third vault is the longer term swing trade vault that I keep money around that I use to trade credit spreads on both sides. And those tickers tend to be ones that I don't really care about collecting. In some cases, they don't offer a dividend, but I believe that they're longer term holds that will at least maintain their value below a number. And I'm always looking for things that go into that swing trade vault, because that's actually more alpha, if it makes sense, than the long term dividend aristocrat boat, but it's also less chopped than the day trading vault. So sorry for the long-winded monologue, but that's kind of the way I've got 3 bank vaults in my head, and that's kind of how I look at it.
Yeah, I always find that I blew up an account once, and it was pretty severe. And it was like that conversation: take money out of the market, invest it somewhere else. Just get it out of the market, spend it on yourself, do whatever you need to do when you're making money. And then the other thing was when you're making enough money, this market becomes addictive to just consume everything around. Like I try to tell people, I'm like, you could.
That's right.
Yeah, if you weren't reading what's on Twitter and reading the rags like the like Bloomberg News or watching CNBC, there's such an attraction. Wall Street Bets, whatever your poison is, stock twits, doesn't matter. And you just placed your trade and went down to your bunker for that month, more than likely you're going to be quite successful.
Yep.
And you just put a limit sell on it, and you're good to go. But that's not how it happens for most people. There's some kind of an addiction there, or at least if it's not an addiction, just your brain is telling you, I need to know more information, or I am very smart, and I need to be involved and actively manage. And you already know you kind of have to already actively manage your portfolio anyways. You're not paying someone to do it. But in that's where you're actively managing, but that's where the bait is placed for you to get to succumb and consume. Whether it doesn't matter if it's doom or if it's extreme bullish FOMO, right? Doesn't matter if you're a seller, if you're better as a seller or a buyer, doesn't really matter. There's a poison and a Kool-Aid for you. And I had to start separating my accounts because what I was doing was blowing up accounts by not separating, by having like a I love day trading. So if I'm going to day trade, it's an amount of money that I can lose. It's not like I'm not going to keep blowing up money. It's almost like an allowance. If that was my trade plan, I'd be back to work.
Yeah, that's great. And I think that that thought process that you've reinforced many, many times is a good thing for people to think about and hear. And I'm sure you've got friends that have blown up accounts. I've blown up accounts.
Yeah.
And there's no more, you can't be more disappointed in yourself than when that happens. It's brutal.
I don't think that there's a, for all the, even someone on FinTwit that's like, hey, like you make fun of you or something, or there's that, I think, I don't know if you call someone alpha or sigma, but if you are trying to make a living doing this or supplement your income or make a life change for yourself, most people that are doing that have probably are in some way competitive. They have high expectations of themselves. I guess if you're in this long enough and you're able to stay in it, even if you're not always the best investor or trader, my point here is to the idea that you're probably your own worst critic more than anyone else could be when you are a loser. I'm assuming that most people that lose big money in this market are probably their own worst critic.
Yeah, I definitely agree with that.
And hold themselves internally in how they think or feel, or a mixture of that, difference of that for each other into their trading and their investing. And feeling, man, is there's some other times in life where I've made mistakes, but specifically blowing up accounts is a brutal experience. it's bad. Like, it's not monetarily. It's bad. Like the trader psyche to the trader psyche. I've walked away from trading at times due to it. I broke a desk once. I've gone down the make more bad trades. I've done I've been told the advice stop trading, and then I didn't take the further advice to relearn how to trade. I took like a week or two off, come back to trade, and then I'm same mistakes all over again.
Yeah, and I do like the Tom South approach, which is if you get sideways, then go small, right? Because you got to take a look at what your trade log looks like so you can learn from it. But you also got to make sure that you don't continue that trend. In my case, I was sizing up too much, and I had the overconfidence of being sure that you know what the market's going to do next, and that never works.
No, it doesn't. In the sizing up, I've got a rap sheet of how could I have, like, when I look back to when I was like the progression as an investor and trader, I can't believe some of the poor decision making or uninformed decision making, or how did I think this would work or continue to work, or account building is different, different rules for account building, but not at this point.
Yeah, and I actually think that that account building is a critical education point for me, that the time frame matters, right? So if you are going to trade and you tell yourself you're going to be a short-term trader, then you got to be true to yourself and honor that the learning lessons there, because part of the problem that I've got with FinTwit is you've got some of these folks that are selling subscriptions that make it sound like the same thing that works on a trend day will work on a regular range day, and that's just not true. And
everybody's got a different, or everybody's got their own motivations, right? Some are fees, some are collecting fees, some are just having a public persona, some are own companies and they just need to be out there. Some are writing articles on Medium, right? There's like people are like I'm a journalist, like a faux journalist, not even a real journalist, like a faux journalist. And then or some people have like I have to be the Super Bear, or I have to be the Super Bull, or even bots, man. There's like craziness. Like I know that there's bots on Twitter and Reddit and elsewhere. And people don't know that they're picking up the opinion of a bot that's being astroturfing. And then, of course, you're just a real person picking up that mindset, right?
Yeah, and you're seeing it repeated 3 times, so you think it must be consensus.
Yeah,
that's exactly right.
Sometimes so it's weird, too. I notice it. I don't know. I haven't been on Twitter or social media a lot recently, but I was noticing. I was like, oh, I know I know who pushed this narrative. And then I can see like a person with 1,000 followers pushing it now. And I'm like, I know that person that initiated that has no skin in that trade, or in that they have no money on that trade or that concept. But now someone with, I don't know, 10 grand or 100 grand or something's like, yeah, I'm trading that. What that guy said over there, I'm trading that. And I'm like, ooh.
Ooh, yeah, that's right.
I'm like, I don't know, man. Like, I can shit post all. I mean, and some of it's just. It's reduced down. It really is just shit posting. Like, not the person that pushed that concept, to some extent. And I'm like, you're actually not putting money in the line on that. Is that person that you got that from, or you probably now have gotten it from a third or fourth or fifth person, that has now turned it into something, and you're now digesting it. Now you're taking an actionable trade on that. And I don't know if now that leads into a whole other thing where I'm like, is that person actually trading money on that concept, or are they just saying it, or are they at home and they just, because I see it over and 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 over, and I go, man, these, it's a funny thing. Sorry to keep talking. I was on the phone with somebody yesterday, and Binky, and I said I was in chat yesterday, and we were at like 1.8% down by 11 a.m. And I go, and I'm on the phone with somebody in a day yesterday, and I go, I was like, in stream, we're down at 1.8% by 11 a.m. I was like, not only that, we were at a place to take the money and run. And I was like, if you have money in this market in your sell side on that trade, you're going to take the money and run.
Yeah.
And then people say, well, no, we're going to go down some more. We're going to go down there, close that gap, and probably further. And I'm like, okay, so now you're claiming we're going to do 2.3%? Possible. Probable? No. 3%? No news. News Squawk is dead quiet. Twitter's dead quiet. 3% is pretty big move. It's 11 a.m. And then I'm like, now you're asking for 5% in like 2-3 days? I'm like, that's a big move. Like, that's like COVID shit. And so I'm talking to this guy yesterday about it, and I'm like, I hear this oftentimes on FinTwit too. And I'm like, if any of these bears had any real, not just bears, but I guess bulls too. But if you're a sell side and you had that viewpoint in from May or June of 2022 until today, if you applied that to trading, you'd be broke because you have to take profit. This market for the past 9 months has been sideways up and down, right? It has not been all-time highs, and it has not been a crash, right? From
That's exactly
June
right.
or
That's
October.
exactly right.
What's that?
I said you're exactly right, and you can't, and nobody can afford to be that bearish that long and just carry it.
Or even bullish, or with real money.
Absolutely, absolutely correct.
This is a market of, hey, if they gave you 1.8%, but from 9:30 until 11 a.m., you take that fucking money and you run. Sorry.
That's right. There's no shame in taking any gain.
Yeah, I don't. I think if you put all your eggs into that trade, that like, hey, we're going 5% down today, I'm like, no, that's not real. Like, that hasn't done. We haven't done that since beginning first half of 2022. You'd be back
that's
to work
right
at this point.
Yeah, and one of the biggest indicators of that, and it's and you've talked about it several times on a stream, is if the behavior of the VIX, whether you believe it's broken or not, reflected that amount of volatility, then you could believe that it's something's materially changed. But and 2014 taught me that that's just not the case. If the VIX is dying and on the floor, that means nobody is paying to really deal with that kind of tail event.
Might have a squeeze coming up here. Be careful here. Still have a bear flag above. I'm going to do a quick market update. We still have a bear flag. Here's the 5-minute chart. Can see that our barrel plane right here. That white line's right here. Red line right here. Red line's still kind of flat, not really rolling over too much. A little bit of flattening going on. You can see it's not completely vertical right now. Do I expect us to bloodbath it here down into 2 p.m.? Probably not. I'm assuming the short will come off the market at some point heading into 2 p.m. If you guys have, just at this moment right here before we go any further, we're going to talk about regional banks. Do you guys have any questions really quick in the chat for Binky? Henry, if you can't post in the Discord, it's because you have not read the rules. Anybody have any questions in the chat for Binky? You're still there, right, Binky?
Yeah, I'm there. And if there are no questions, that means I'm either boring or making sense.
I think you're making sense, man. I think they just like listening. So if you, so how about we continue on? Talk to me about regional banks, because I know that. Oh, wait a minute, hold on. We got any book recommendations? Does Binky chat in Discord? Yeah,
in Discord, I'm Frank the Bear, and don't chat often, but I do make comments on occasion and respond to questions.
So Frank the Bear.
Yep.
Binky, do you want to give maybe don't tell everybody what you did professionally if you don't want to?
Yeah.
What you were? I think you're a C-suite, right? Or you're ops suite or something, an operations pretty bigwig, right?
Yeah. Yeah. And I was a technology guy in one of the large transportation firms for a long time. And the good news about that is I got familiar with technology early on when I was a pup, and I've kept that interest and occasionally do some consulting work. But I learned a lot through that experience about the market dynamics and I think Jimmy Bieri made the comment earlier in the stream, the transports are one of the ones to watch about what the real economy is doing. And I believe that is absolutely true. And fortunately, with good input from Winky a couple of weeks back and then I made a couple of posts in a couple of places about what I believe was going to be interesting earnings from FedEx and then UPS. And fortunately for me, both of those trades worked out exactly the way I thought they would, because FedEx went through a consolidation period, which was a attempt on their part to manage and control costs more aggressively. And UPS reported realistic earnings projections, which the street was surprised about. And in both cases, both those trades worked out for me very well. So I keep an eye on the transports for that reason, just as an overall barometer of the health of the economy. And then I happen to have some good friends internationally that keep me posted on their view of logistics and transportation. And so that part mentally likes to track and keep my eye on. The regional bank thing, we've been hearing the story over the past couple of weeks that story is over. And last night on Brian Sullivan's show, The Last Call, he did interviews at the Milken Institute conference with Michael Milken, longtime investor and trader. And then he also did an interview with Kyle Bass, and both of them were making the comment that the way that the banks have managed their long-term debt and long-term investment suggests that there may be more downside. And First Republic was obviously the most recent thing after SVB that failed, but there are several other banks, regionals, that were expected to have a little bit more of a downturn as they announced earnings. And instead of it being a 5 or 10% downswing, is more like 25 to 30% for some of those regionals.
You remember, you know that you're in stream every day, and we've been talking, like Winky, I, and you, and a bunch of us were having conversations weeks ago, and we were discussing how we're on the tail end of financials, but if you do get into financials, that it could be months, right? Months or even a year until they come back,
absolutely.
Right? Is it somewhere you get the original bounce, or should you be looking forward to another sector that's coming around, right?
That's right.
And I think we've all gotten, I made some money in this, but then I lost some money too. And the regional debacles have been going on. And my question to you on the regional banks is, in truth, is this real in your view, or do you think this is manufactured corporate rate or a large bank rating?
Yeah. So, all right. So we don't give any financial advice, but I have a personal degree of confidence that the shakeout is not done yet. And so I'll list a couple of tickers, and these are not these are ones that are on my watch list.
Get
so
your pen and papers out if you're watching right now. Get your notepad out on your, I don't know, supposedly none of you own computers anymore. You're all you get. We've reversed. When I was a kid, everyone wanted to know about computer hardware, how to build a computer. Looks like all of you out there are using your phones. It's like no one knows how to operate a computer any longer.
That's right. So on my Turbo Abacus, the tickers that I'm tracking right now are Zion, Z-I-O-N, Cullen, which is CFR, Truist, which is TFC, Comerica, which is CMA, and KeyCorp, KEY. Now those, and this is not financial advice, but they're all on my watch list because hypothetically, if you take a look through their balance sheets, they have above average capital risk that could mean that they might be in the hurt locker. And I got asked, and I get some great message questions from folks.
Yeah, well, for what? Did you answer my question? Is this manufactured or is it systemic? Or not systemic, but
all right.
So it could be systemic if the right people are making it systemic. Do you think it's manufactured, or do you think this was something that was real?
I think it's real enough that some smart bankers made some unsmart decisions, but I think it's being exacerbated, to your point, so that it could be construed as manufactured, because once a company is on the ropes, as you know, the more manufactured crisis that can be invented around names like those, the more likely that there's an adverse impact.
Tell me what you were telling me this morning. We had a call. We were speaking early this morning. So tell me about when short sellers come out.
Yeah, so when short sellers come out, and I think this is common knowledge, but I know we got new traders, they will generate stories, news stories, internet postings, blog posts that tell a rational, if not substantiated, tale about what may or may not be going on with any organization. Banks in particular, the way that transpired, I think everybody knows, but just in case people don't, that Silicon Valley Bank was a bank that was, I think it was around $3.20 a share trading, the bank shares itself. And Peter Thiel was one of the guys who was an investor in that bank. And he recommended to his subscribers and investors that they take their money out of the bank. And the trigger event wasn't at that point what the bank had done already or not done, but the trigger was the bank run that actually triggered the request for withdrawals that then resulted in the bank having a liquidity problem. And as you and I discussed offline, the San Francisco Fed, if you go back and look, the great financial crisis between 2008 and 2012, San Francisco Fed actually was part of the oversight that was put in place in theory to shore up some of the financial institutions that were in trouble around the great financial crisis. And that San Francisco Fed was also the regulatory function that kind of fell asleep at the wheel in this most recent debacle with SVB. And the president of SVB Bank, or the CEO, can't remember his name right now, was on the San Francisco Federal Board. So
yeah, so Winky's making a comment here that you and I were talking about this morning, was that the only thing you can't protect. There's no bank out there that if they get a bank run that you can. It's the one thing that there's nothing you can do, right? If a bank run is created, and who's creating that bank run, who's exacerbating that bank run, any bank will go under with that, right?
That's exactly right.
Yeah, we talked about that this morning, and then that introduces the short sellers coming in. We know what Yellen was doing when Yellen was meeting with Jamie, and Jamie's like, well, if I'm going to be the savior of regional banks, I want them for cheap, right?
Exactly.
I loved the argument I loved this past Sunday. They were like, it came down to Jamie Dimon and JPM. I'm like, that's bullshit. I'm like, that meeting took place 2 fucking weeks ago. It was discussed already. Winky was talking about it 2-3 weeks ago. Like, he's like, there's a really fair chance that there's a scam being run right now. And it's all playing out right now. That's all playing out right now.
That's right. And one of the things I love about Winky is he doesn't pull any punches. When he has an opinion, he'll share it. And I think that is a perfect example. And I listened to some of that spin last night where, Jamie Dimon just says that he was stepping up when he was asked. But, of course, he was part of the discussions when it first went down about what should happen next.
Well, and then he had that dinner. I mean, I keep harping on this. He's over there having dinner with Ackman and a bunch of other people, and it's like, can you imagine, like, you and I just be like, I'm going to go meet with Yellen, and then I'm going to go meet with a bunch of people on FinTwit that are going to cause a bank run. Like, and everyone's got an interest at some point that you don't know about it. It's all manufactured. It's gross. It's somewhat public. You can't keep all of it hidden. And we were talking this morning too, man, about like when do you get a crash? And typically, it's not where we are. It's when they think that they've beaten everything, right?
That's exactly right.
Right? We know when they lose. Until they break it, they abuse it. They're disgusting, man. If you think you're greedy, you don't become the CEO of JPM, right? Unless you are a sociopath, you are greed, and ruthless and intelligent, and you'd sell your own child.
I have a little personal experience with this. Some of the best salvage operators also do deconstruction and demolition.
Mm-hmm. Yeah, I don't disagree with that. I think that if I don't want to. I think some of it sounds like conspiracy wise, but
right, yeah.
And but that a lot of it is manufactured. I do agree that FRC and other banks like it, most certainly should have had or knew better. Like they have some blame. But at the same time, like the bank run being caused in these banks, that's all.
Exactly.
That's like corporate rating from the 80s, right? That's like old school corporate rating.
Yeah, that's right. And the interesting thing about that is that when the banks and any regional bank gets in trouble, its options are actually kind of limited. It's got to go to the Federal Reserve window, and I'm sure there are other guys in the stream that know a lot more about it than I do.
Yeah,
to get some bridge funding,
mm-hmm.
and attempt to renegotiate with itself what some of those longer term obligations are. So it's the right combination of manipulation and incompetence that creates that window of opportunity for short sellers and people with nefarious intent to take advantage of.
That's basically, it's old-fashioned corporate rating, right? If I had to look at it with a clear lens, it's just old-fashioned corporate rating.
That's right. So one of the questions that I got was, how do you know which ones are going to be victims, which banks are going to be victims of that, and which ones aren't? And one of my good trades recently, and it's not a thinly traded ticker, but it's not talked about that often, is DPST, and that's it's sort of like SDAO. Mm-hmm. It's a leveraged fund. It's actually a leveraged bull fund, and so that's one of those ones where if you think about your positioning, you can be positioned both ways for that to trade if it goes up or goes down. And as you've called out many times on the stream, that SDAO play, you don't want to be carrying a large expense for having that trade on. But when it looks like it might be frosty and ready to jump, that's one of the tickers that I use to express that kind of trade.
So what's your I'm going to ask you two further serious questions, then I'm going to ask you some fun questions. today, well, we know nothing's happening right now. Well, let me chime in for the audience here. Number one, you're seeing a hedge on the market. This is normal as we come into all of these event releases. We get a hedge on the market anytime between 11:30 in the morning and 1:30 in the afternoon. We tend to see the hedge come off. You'll see some squeezing, and then usually another hedge put back on into the 2 o'clock hour. So just be aware of that. This is a common setup for event days. We'll review the day at some point later this morning or this afternoon at like 12, 1 o'clock, somewhere in there. We're going to talk about expectations, what to expect into the 2 o'clock and 2:30 hour. But until then, I'm going to ask two important, serious questions, then two simple questions. John Haggerty's got a bunch of questions for you, too. I'm sure that you guys can chat as well. He's asking about transports. And just from what so far Binky has said, we all know transpos are important, right? It's kind of like Dr. Copper, right? You want to know a lot about transpos. Binky has inside experience with publicly traded companies from the C-suite on transpos. So if you want to dig into somebody and be like, hey, man, I need to know more about this stuff, he's probably a great resource for you. Now, Binky, two questions for you. First I'm going to lay out for you is specifically to today. What do you expect out of the rate decision today?
I believe that Powell is going to be the driver with his comments, of course, but I think the Fed is going to stick to the 25 basis points, and then they're going to basically say that they're going to hold until they get more data. I think that will be perceived as bullish for the market because that's what the market expects. I do believe in your comment that he may be hawkish in those comments.
Losses, U.S. crude falls,
and hawkish in those comments could trigger a negative reaction just based on the skittish nature of some of the downside activities that we've seen in the market. But my base case is it's going to be bullish if we stay neutral on further rate changes after a 25 basis point hike.
So if you're a trader, you could possibly even just wait until this news is released and then look for that bullish trade, right? You just like
exactly
pass
right.
over today and just see if the reaction is overwhelmingly to the upside, right?
Exactly right. And you have talked about this many times. I don't really want to pay for that volatility shrink because I don't have a strong bias either way. And so I'm actually flat. I'm flat this morning after the trade yesterday got me to where I felt like I needed to be. And the short answer to the question that John Haggerty was answering or was asking is rail and trucking with a smattering of ocean going have experience with all of that. And my level of expertise is pretty varied and extensive. So I'm happy to share whatever insights that I can to help anybody be successful.
And then, so I like your idea here. And today, my fear here is I thought I heard it in your voice. How do you contain a pause?
Exactly.
How do you temper money flow into the market? You really can't, right? If you, no matter what Jerome says, I think even if it's a post or even if it's a reaction that's delayed,
yeah,
if the news picks that up and starts running with it,
yeah, then we're going up. And one understated thing that we haven't talked much about is that we're right at the start of month flows, which I think is one of the reasons why the volume was light yesterday. I think people are waiting for this decision to go one way or another.
That's a very good, valid point. And it's weird, too. 2 days ago, on 2 sessions ago, we were talking about putting put spreads on the market when we're up at 417, right? And now those printed yesterday, so it's like, what do you do?
And that's exactly where I am. And honestly,
you stay flat and wait for an answer, right? Or direction.
That's right. And farther out, as you pointed out, and I think you made a great point before you went on break, I've got put spreads out for much farther out, like June and August.
Yeah.
And those are cooking with gas right now. So
the other thing too is the thing that I find fascinating that I don't see most people talking about. I made a quick comment about it on a post on FinTwit about today. The end of the post I had mentioned. I don't hear anyone talk. Let's say everything's bullish. Like let's say a bull's out there and he's like, "Yeah, baby, pause, baby, pause. It's gonna be so good. We're gonna go up. It's gonna be crazy." I'm like, of course, I'm like forward thinking, going, "Yeah, but let's say they do pause. Let's say we got no rate increase today, and we paused. I would be like, shit. Now from this point forward, every single rate decision in FOMC is going to have volatility. And hey, are we now getting a rate increase that we don't know about? And even if we raise 25 BPS now, and they say we're going to discuss pausing, and let's say pause the next rate decision, the moment that we do actually pause, I think then that opens like a door of just insanity. You're going to get people out there just being like, "Oh, dude, we're getting 50 BPS. We got to pause for two months, man. It's going to be bad, dude. 50 BPS. Market's going to crash, and then you're going to see like violent trading on the stock market."
Exactly right. And I don't mean to laugh about it to make light of it, but it's just like the other nonsense peddler that you called out yesterday, which is if Janet Yellen actually has a press conference today, then it's going to depend on what nonsense she spews. Sorry.
Yeah, whatever she says today is not intended to be real. It's intended to add volatility. That's the only intent.
Exactly right. So that's kind of the way that I see today going.
So I'm like, does a bull really want that? Or I think a bull wants like 25 BPS, and then if they do get a pause, they better be hoping that the Fed says something like, "We're going to pause for the next 3 months," like defined.
Defined, that's right.
Because if you don't define it, man, we're going to sell into every single one of those. Those meetings, we're going to sell violently. I think we will, or I think that people are going to be, what's coming up next. Right now, they're still pretty public. We're not. I know that you remember they used to love to be like, we're going to publicize these 8 points, and we've got 2 whammies that you don't know about. So you walk into one of these Senate hearings or meetings, and then they're like, "Oh, by the way, we're dropping 2 points we're raising interest rates by 2 points here. We didn't tell anybody." And the fucking market just 200 points straight down.
Yeah, exactly right. And so they traded transparency for nonsense.
That's hilarious. They traded transparency for more kabuki theater, right?
That's right.
We'll be transparent, but then we'll throw the kabuki theater in.
So so the question is, if they do pause and the market thinks that they're going to be cutting by the end of the year, how long will they pause? To your point, if they don't put a time dimension around it, and volatility starts to tick up because of that, then I think we're in for the rodeo ride for the summer.
I think for me, I think that there is a potential for no rate increase today.
Yeah.
And what scared me on that was Tim Rose's article. He mentioned it 2 or 3 times. Not just pause, but cut. And I was like, damn it. Oil, CL, is oil selling off? I'll be honest with you. Oil is telling you that there's a possibility of a pause today. Oil is screaming that we're getting a pause today. So that's scaring me.
And then,
oil selling off can lead to the S&P just screaming higher, like just ripping faces off. So that's making me fair. Volatility Wiz mentioned it this morning, and I was like, oh, he sees this too, that there's some risk to a full pause today. And then to your point earlier this morning, when you were talking about regional banks and Are they being forced into not a 25 BPS, but an actual pause? I think we get the 25 BPS today, and I think the market today will be I think two things. I think that we get 25 BPS. I'm going to stick with what they're telling us. If we get a pause and not 25 BPS, we're going to rip some faces off. Hands down. If it's just like we're pausing, it's going to be blast off. Hands down. Hedge coming off the market, in my view. If we get 25 BPS and then talk about a pause, I think that the market will be range bound today and that we're going to continue to roll over. I think 50 BPS, we start bloodbathing it. And I think to your point, what you said earlier was if Yellen comes out and she just pops up oh, we're going to interview Janet Yellen on CNBC right as this drops, right before the presser. She comes on for 20 minutes on CNBC. If she comes on, that's bad. You got to be we have to have CNBC on in the background just in case she pops up out of nowhere. And then, of course, to your point, Jay Powell has to sound hawkish if it's a pause, or if the statement says 25 BPS with a pause through summer. Timorous specifically said 25 BPS with a pause for the summer. He gave a time frame for the summer, but he also threw in cuts today, or in that article he said cut twice, and I was like, dude, I don't want to hear cut. I don't want to hear cuts. I don't mind pause. I don't mind 25. If they cut, that's a whole other can of worms. Last question for you would be, as we asked you about today's event, do you see us, or not? I'm not going to hold you to this one concept, but do you see us? What's the probability of us trading sideways? Is your view high probability of sideways and up for the year, for the rest of the year? Do you think high probability of sideways and up with a 25% of a bloodbath at some point this year, or if they cut rates, or do you think that we're just going down from here, slowly sideways and down? Do you think that we have real risk for crash? You mentioned that earlier to me this morning, that there's something underneath the surface that does have some crash potential. So I'll ask you that, and we'll get into some fun questions. We'll be done.
Yeah, sounds good. So my base case, based on what we're seeing so far, and I always appreciate your insight as well, is when I look out towards the end of the year, we could be higher. The thing that bothers me is when I look at the market breadth, what I see is everything that's in IWM, everything that's in the Russell is still struggling, partly because of the regional banks, to find its footing. So I think that the overall market did hit a meaningful bottom last year in June and October, and a viable bottom in my case, because I'm a long-term investor. But I also think that we could be headed back down there. And I know the top end of that JPM collar is right around 3,800. So when I talk about the bear case, that's what's in my head about the bear case. And the crash scenario is that if sentiment gets spooked enough, not just by the regional banks, but I also think it will take a further erosion in commercial real estate and credit defaults by other businesses. And I'll mention two. One is insurance companies that always have long-term versus short-term paper, and I see potential risk there. And the other one is all of the recovery plays that have not found their footing yet. So is the new floor for some of the high flyers, let's just take Tesla. Tesla could be a $60 stock, and I would be a buyer. That's a perfect example that you've rationalized several times in the past. Does that retrace actually happen in this calendar year, or do we actually have to start another? Because I believe we've already had one mini recession, another recession and downturn. And again, I'm a long-term bull, but I do see some bearish headwinds out there. So that's the long answer to your question, which is I think we're in a sideways and downtrend to the end of the year, with the caveat that if the market actually recovers a little bit and we see market breadth go up, and or we get a resolution to at least the war in Ukraine, we may still have more up that we can sustain.
We were talking about that this week. Was the hey, mission P777? Thanks, brother. I appreciate it. Squeezing higher right now. I think to the soft landing scenario that bulls need that war to continue. That it's part of that process. I think if we have resolution to Ukraine, that's bad for bulls. I think if we have resolution to China, it's bad for bulls. Rate cuts, bad for bulls. All three of those are some major things the bulls don't want to see right now. Squeezing high right now, trading 411.55. It's 11:56 coming into the half hour right now. It's 12 p.m. And just a big old squeeze right now. Big old bull flag right here. Hold on a second here. Got a technical difficulty in the background. Nice little squeeze to the upside right there. I'm not trading any of this. I'm not in any zero dates right now. I'm not taking part in any of this stuff right here. We are seeing a reversal right now. We'll see if the shorts come back in and try to squeeze this back down or not. We usually see this stuff happen at 11:30 and 1:30 in the afternoon. If you're going to trade this stuff, sometimes we see it take off and run. Sometimes we do not. You'll see one more roll back down into the 1:30 in the afternoon hour, and then we'll get one more squeeze higher. So right now, let me just check on the chat right now. See what you guys are saying. Yeah, cup and handle. Let me see what you guys are doing here.
One quick comment on transportation tickers to monitor. I always watch FedEx and UPS. Those are two bellwethers. The other one that's the dark horse is Amazon, because Amazon has a large enough trucking fleet that it's not actually considered a transportation company, but they're operating, if you take a look at their balance sheet, their operating expenses are heavily affected by labor and transportation costs. So,
yeah, I was, for me, I feel like there's two things. If I was the Fed, if I was Jay Powell, there'd be some things I'm thinking about. It's like, the more time that you buy, the more chance of a soft landing. That's the truth. More time that you buy, trade this market sideways, more time you're buying for us to actually go up. The other thing would be price matters when it does come down finally. We know that at some point there's going to be a roll. So when you're buying that time, what is the price of the market when that final roll comes? You don't think, or I don't know, maybe they do want it to go down to 2,400 or 1,600. I'm sure the banks at some point always like buying the depths of hell. But the Fed likely doesn't, right? The Fed likely doesn't want us to go down there. They don't want to see Apple at $10. 401ks don't want to see Apple at $10. They love seeing other shit at $10, but not Apple and their bread and butter. So I think that does matter down the road. But then it just comes back to those next 3 points. Whenever we get those rate cuts, whenever those wars and those proxy wars are helping with manufacturing jobs and all that kind of stuff. The moment that stuff ends, I do think we see that roll. I think right now that I think until we stepped in and helped the regional banks, there was an agreement. There's an agreement with corporate America, with the stock market, with Joe the mechanic. Everybody out there, there's an agreement. The agreement was broken. The Fed showed their cards and said, we're going to support along the way. And once they decided to support along the way, once the balance sheet bounced up again, we know that some of that money is going to the auction, but some of it's not, right? They're warehousing it for future generations. Well, they reintroduced some of it when they supported the banks. And they're going to continue to support. They're going to continue to support commercial real estate, any other like car loans, you name it. They've already made it known. So they've broken their deal with everybody in terms of inflation. They're now extending how long we're going to deal with this. And so when that agreement was broken, in my view, I was like, if the Fed's telling you this is going to take longer than they anticipated, and I just read an article from the Wall Street or the Washington Post maybe or somebody, and they said don't expect the Ukraine war to end this year. This was last night. They're talking about the mass casualties from Russia, and they said don't expect it to end. And I'm like, you know what? They're not going to want it to end. They're going to want it to continue. If Jay Powell's telling you it's going to be 2-3 more years, I mean, I'm like, hey, I want resolution by end of 2023, maybe possibly 2024. And basically, Jay Powell's telling you, well, maybe it's 2025, and we're going to support along the way. And then I'm like, well, we have to continue war then. And not only that, you're going to get people, to your point earlier about the market trading sideways and up, you're going to get people that are going to want to put some risk on in this market. The only other thing I can see maybe is the politics. You see like an outsider run like Ronald Reagan did, where there was like, fuck it, we're going to make everybody a bunch of money, or we're going to get greedy again earlier than anticipated. A regime change in the presidency and the Senate possibly could turn the greed faucet back on.
Yeah, and I think you brought up a good connecting point, which is all of the pension funds that have money to invest every month have to have that money go somewhere. And some of that money is going into money market and yield return strategies. But some of that money that's on the sidelines that missed that bottom is still waiting to decide where it's going to be.
Yeah,
and unless they've got a mandate, and unless they've got a mandate that allows them to stay in cash, at some point, the fact that they have to do pension distributions to folks becomes a driver for them to have to look after that yield. So the fact that you brought that up several times in the stream is a constant reminder to me that there are people actively looking on what the opportunities are, and we should have a discussion.
Yeah, there's money that wants to be deployed. I mean, you're not going to sit there and make 5%, and if Jay Powell's saying to you, I'm going to support all this shit, and we're not going to actually catch up to inflation. He's saying it today. If he's saying that to you, you and I both know, if you have real money, that it has to beat inflation. If it's not going to beat inflation in a bank, you have to find a way for it. It's either buying real estate, it's buying something that goes up in value, or put some risk to have that money make you money. Because otherwise, you're gonna come out of retirement and you're gonna get a job.
Exactly right.
We all know what that turns into, and of course, there's other mechanics, right? The people that are in, they don't want to get a new truck because of high rates. So they're like that, like I forget her name. Like we called her like Mary that has the landscaping company. We got to wait her ass out, right?
Mary the landscaper. That's right.
We got to wait out Mary for the next 4 to 5 years before she needs to start refining stuff. And Jay Powell's like, it's going to take longer. That's
right. So one of the things that I really like, Cap, is, and you did it back in 2022 and 21, which is you've got the screener that looks for those tickers that are opportunity, and you talked about 2 of them earlier, and it's not financial advice, but going through that exercise is a great way to figure out which ones might have the alpha to help generate some income. And I know for a fact that I'm not alone I'm not just some older guy that's in retirement and I'm afraid that I'm not going to make it. What I'm afraid is, and you alluded to it earlier, I'm afraid that the government is going to keep charging me more in property taxes for the real estate. They're going to keep coming up with other taxes, usage taxes, my vehicle taxes went up, and all of that is just burning cash, man. So it's about cash flow and how do I make enough money to keep feeding the other 2 bank vaults.
Yeah, that's Our taxes this year were a disaster. Not a disaster, but we needed to do audits. We not audits with the IRS, with internal audits for our companies. We had a lot of work to do this year. It was a disaster, and it's some Airbnb stuff and some not Verbo. I don't know. They always try to repronounce themselves, but we've had to, our taxes are, I just got a new tax bill, and it said you have we have a new rehab renovation tax or something, and I was like, we didn't renovate, and we did, but it was like we didn't renovate, and we didn't for this one house, we didn't pull permits to renovate this house. I shouldn't say that, but
I'm glad I didn't hear it.
Oops, beep. And but that my wife contacted the county, and they were like, "Oh no, everybody got that one. Everybody got that tax increase, and we just called it that." And I was like, "Okay." So I guess everybody is, and we've been to the meetings where they already know. They're actually tracking Zillow for people that are updating their properties saying that they are renovated. So
that's right.
Yeah,
that's
they're you might not know this if you're out there watching right now. Zillow is selling. If you go to like Zillow or Redfin or anything like that, and you update your listing or your home and say, "Oh yeah, we just did all these renovations," and you post a bunch of pictures, and you want your property or your house or your rental or whatever it is, even if you're not selling it, if you're out there trying to tell the world that you've done these things, Zillow is selling those to counties around the country to come and inspect your home.
Crazy.
Or if you go to sell it and you're like, "Oh, we're going to do this and we're going to do that, and we don't need to pull permits. We're just going to change out an outlet." Some of you probably don't know that anything behind the faceplate, you can't even touch it. You can't even update it. You can't even be like, "I'm going to switch the color of this outlet." Forget about running new outlets. Just like I'm going to change that switch out. That you're supposed to pull permit for that. I know most of you don't.
Yeah, I ran into that in my local jurisdiction, just replacing a water heater. Found out
do
that
not
required
update anything unless you go to market. Nino's saying it right now. Do not update anything, and I mean like you're going to market. Like, don't be going on there and like telling people what you got for street cred or anything like that. Make it look as bad as possible. If you don't know what I'm talking about, you don't pay taxes.
That's good.
It's terrible. Okay, so I usually ask some fun questions. What's one of your favorite hobbies? I got 2 or 3 for you. What's one of your favorite hobbies?
I like playing guitar.
Hell yeah! I heard you're in a band.
Yeah.
What kind of music do you play, and what's your favorite music?
Classic rock and blues, and I like all kinds of music. My favorite is probably metal.
Ooh, metal. Do you like Megadeth or Metallica? Old school Metallica, Megadeth?
Yep. We were talking before about live concerts, and I've been to many of them, and a few of the best ones were Metallica concerts.
Yeah.
And then old school, and actually longtime fan of AC/DC. So
nice.
Yeah.
We get some Aussies in the audience here too. They're probably hearing that and just like fist pumping.
Now contrast that with I like a lot of bluegrass.
Yeah.
Alison Krauss and Robert Plant were in a town on tour close by recently, and that was outstanding. And
Alison Krauss is awesome, man.
Yeah, and then I like jazz, like old stuff, Miles and John Coltrane, all that kind of stuff.
I love jazz from the 50s.
Yeah, good stuff.
The jazz movement in Europe was amazing. Now, what about movies? What's a few movies that you like?
I like Pulp Fiction.
Ooh, that's a good one.
Like No Country for Old Men.
That's
and
another
that's
really good one.
Yeah, that's mostly about the dialogue. Old school. I like Jaws, and
Ooh,
I'm a
that's a good film
sci-fi
too.
guy. Yeah.
Do you think we're in the age of the death of movies and TV?
I think that the AI stuff, because I've been playing around with those tools for a while, the AI stuff is going to redefine a lot of jobs. I actually think that you ought to have when we get to the summer slow period, discussion with maybe a roundtable discussion with a couple of other folks to brainstorm which companies we think are going to be at risk from AI. Because I know that Screenwriters Guild strike is going on, and one of the things that they're asking for out in California, I've got a friend that works out there, is they're asking for a minimum number of writers in the writing sessions.
Yeah.
And I understand why they're asking for that, but that's actually going to be really tough for the producers to commit to because of the AI tools getting better and better.
And we have some people here that are in the movie industry. We have a director, I know that. And we also have an actor, a famous actor. I'm not going to divulge his name, but he pops into streams sometimes. I'm not going to tell people who he is, but we have a famous actor. And then we actually have a female actress as well, or a female actor that's on Twitch. And so we do have some industry professionals that could probably talk at some point on this. Well, you know what? We have to have you on more often, man. Whatever you're feeling it. Okay, one other question.
Go ahead.
For a new investor, new trader that's here right now, you've been in this game for a long time. What could you say to those people? Any advice for them?
Yeah, two things, and I've thought about this several times. You got to give yourself grace. You can't assume that because it's not working that it's you, but you got to be humble enough to realize you may be your own problem. So,
Ricky Skaggs, wow.
Yeah, Ricky Skaggs, he's a picker and a grinner.
Yeah, I know he is. He's famous.
The other thing for new traders that I suggest is, and you've talked about this many times, you got to put the screen time in to actually understand what the behavior of the ticker is going to be that you want to trade. And SPY is a great
time,
one.
man.
Yep. And when I started trading, I was looking for the shortcut, right? Everybody wants to find the 3 indicators, and there aren't any. And one of the epiphanies that I had, I think it was around 2018, was I figured out when it's going to turn. I know when the market's going to turn.
Mm-hmm.
And when the market is going to turn is when the guy that bought the last contract decides he's going to sell it. And he's the only one that knows he's going to sell it. But the reason that he's going to sell it is because he knows that he was the last buyer. The price doesn't go up anymore. And I've seen that with every stock, including SPY, on dead days. When there's no more, then you got to decide whether you're going to be the first one to sell it or whether you're going to hold it.
The bag is full, right? Whatever. You bought the bag and it's full.
Exactly right.
There's no more room in the bag. And someone told you there was another inch left.
And the way that I learned that lesson personally was being one of 5 people, as far as I could tell, in December, trading Bitcoin in a slow overnight session. And I realized the other 4 people were all on the phone with each other.
Yeah. I like that analogy. We were talking about earlier, right? They're gonna have to have, like, you need something, like we were talking about. Well, how do we get the crash? You're gonna need the banks to start selling into each other, right? They need a reason to sell into each other.
Exactly, and panic's a good reason, especially if Jamie Dimon's not answering the phone when the other guy calls.
Yes, sir.
One other comment for young traders.
Yeah.
Take a look at the annual report for Goldman Sachs and their trading division. And the reason for doing that is go back as far as you want to, and that company has always made money. So when we talk about whether it's, and I call them Citadel, it's an editorial comment, or Goldman Sachs or JP Morgan, those guys know how to make money. And if you've ever been blessed to talk with some of the people that trade that money for them, you realize they are cold-hearted bastards. And you've described that before. They don't care. They just want to make money.
Money, baby. That's what it's all about, right?
Yep.
Ruthless. Okay, so we're gonna take a break here. I have to go potty. It's 12:16. So I'm gonna take a break from now until 12:30. First off, Binky, I want to say thank you for showing up and spending some time talking to us today.
My pleasure, man. Hey, I really love what you do, Cap, and I know that you're there for the community. I know you get tired of it because I talk with you and we text on occasion, and people really do appreciate what you do, and I hope that you take some comfort in that.
I do.
I love what the direction is with the website, because I actually think that it will become more valuable to people as they learn more about what you've got cooked up. And like you said the other day, if it works, it works. If it doesn't, it doesn't. And one of the other things for new traders, when you have a good community, they are so rare that it's really important to help take care of the people that you're part of the community with. And I don't want to overstate it, but this community has the power and capacity to do a lot of really good things a couple of years down the road. If everybody doesn't lose their fucking minds and go crazy, we can actually be a good force for, doing
Our
good things. Our
community is insane. I am shocked at how insanely good and really good traders and investors. In the alpha that's dropped by the community and the help that's given by our community, it's rare to see this. I'm not going to name names, but I have been subscribed to some pretty big communities, and I've never quite seen a community like we have. I got to be honest, haven't really seen it,
man. And it's organic, and you can tell the people are operating with good hearts, and that's really inspiring. So when I occasionally get the question about why I'm still doing it, I'm doing it because everybody needs a trading buddy, and this community is the best trading buddy you can have.
I agree, man. 100%. 100%. We talk about this stuff outside of market hours all the time, and I'm like how that comes together is it's serendipity. It's rare to see it come together like that, and that's why you keep showing up every day. It's what you do. You show up every day because you know our community is like a beast. I couldn't see myself anywhere else. I'm like, there's I don't know what else to say about it. I agree with you 1,000%.
And it's fun when it works. So one other quick comment. So when Cap's ready, we're going to post some videos, and those videos we're looking for feedback on. And it's not earth changing. What we're going to do is we're going to try a couple of different formats. We're going to try different lengths. You might be annoyed by the fact that I speed up some of the videos, but I find that actually works, mostly for engagement reasons, for people trying to get through information as quickly as possible. And there's nothing more entertaining than revisiting one of the old broadcasts that Cap did and realizing that you actually did understand what he was saying, and he called the turn, and you could have made money if you'd gotten out of your own way.
Well, that's a whole other conversation. What do you want to hear, what you don't want to hear, all that kind of stuff. But even so, we have to do more clips, right? We have to do more clips, repost those. But we all this stuff in the background, most of these people don't know what's happening in the background. But when it does all roll out, it's going to be insane. People are going to be stoked when they see this stuff. So yeah, you guys look forward to Binky, man. Binky is rocking and rolling in the background. There's stuff on YouTube he's posting, and there's I think Binky. Well, some of the stuff I'm not gonna say. I'm just gonna be I'm gonna be mum right now. I'm just gonna be mum. So, anyways,
Good.
Binky, thanks for being on right now. Thanks for
Thanks,
everything that
everybody.
you've
Thanks,
contributed
Cap.
today. I appreciate you being here, brother. We're gonna get John Haggerty on soon. I keep begging John Haggerty to be on the show too.
Awesome. More the merrier.
Oh man, Devin's saying, well, I love you, Devin. Yeah, I love all you guys, dude, out there. So yeah, Binky, man, thanks for showing up, my brother, and I look forward to trading with you later today.
Sounds good, man. I got to let the dog out. He's going crazy
Yeah,
over
brother.
here.
I'll see you soon. I appreciate you being on, my man.
All right, take care.
You too. Bye-bye. All right, that was Binky, baby. Hold on here. Let's turn off this. Let me see if I can do this here. Stop sharing. That's done. Close that out. Okay, I think I got that. So Binky graced us with his presence today to fill some airtime. We knew that we'd be trading sideways all day long today, and that's what we're doing, right? Up, down, sideways, right back to the middle, waiting for the for 2 p.m. Your next opportunity here is likely at 1:30 in the afternoon. Start seeing some movement, 120, 130, somewhere in there. So we'll keep our eyes pegged on this into the 1:30 hour. We're going to run some polls. I'm going to ask Winky at some point if Winky can run some polls for expectations for today. Maybe Winky has some questions for people on some ER reports we have coming out. Don't forget, too, man, we still have Apple reporting. We've got a lot of the markets still coming up and reporting. I'm going to take a quick break here. Go potty. I'm going to grab, I was thinking a bear, but I can't. It's too early for a bear. Maybe we'll have a bear at like 3:30 today. So I'm going to grab some. I have some coffee here. I'm going to go potty, and I'll be right back with you guys. Take a quick break. If you guys have any questions or anything. Yeah, I miss you guys terribly. You have no idea. Like, in the background, when I talk to so I have some people that work in the background with us, and when I talk to them off stream, I'm like, it's like it's a ton of work, but you don't want to leave because this is our community. Like, this is our community. You guys are my community. I'm your community. I wouldn't trade every day without you guys here. So, it's like friends, but we don't live next to each other. It's kind of this wild thing. It's like a family almost. It's grown into a family. I shouldn't say almost. Some of us are planning to get together. We're talking about having a bunch of us get together down the road and stuff like that. A bunch of craziness. So, I never anticipated or expected that down the road. So I'm a little shocked at that. Well, this is looking quite bullish right now, right? Look at that little bump right there. Ooh, baby, the coiling going on right now in the S&P 500. I'm watching the VIX in the background. VIX tells a different story right now. VIX is saying it's going to go up here. Under normal circumstances, I'd be buying some calls right here for a squeeze higher, for a nice little blast off up here, at least to this 412 and change. I don't know if it continues higher into this R1. VIX is telling you don't do it, or me. VIX is telling me no. VIX is telling me that there could be a reversal. So for right now, just give me like 15 minutes, 10 minutes, 15 minutes. I'll be right back with you guys. Yeah, I'll ask, if you're on FinTwit, follow him, and ask him on FinTwit. But I'll ask him, he's probably listening right now. Maybe he can get into the comments on YouTube and post the banks that he was mentioning. Looking like a squeeze coming up right now. All right, here we go. Got some peanuts. Here we go, baby. All right, all right. Let's take a walk around the market, see what everybody's talking about out there. Not much coming out in the news right now. NVIDIA short interest down 18% year to date. Is number one losing equity short so far in 2023. Blinken saying that says take anything coming from Kremlin with a large shaker of salt. In Washington Post interview. We are looking into the report about a drone strike on the Kremlin, but aren't able to confirm it or validate its authenticity. Big hedge funds faced 72-hour deadline to report major losses. United States is trying to validate Russia's charge that Ukraine tried to kill Putin with Kremlin drone strike. Russian parliament speaker demands Kiev regime be destroyed after drone attack on Kremlin. We are coming into, you may or may not know this, but we are coming into energy season, and we're at the lows down here in XLE right now. We are not oil, but energy company season. This would be people that provide material, produce, transport, that kind of stuff. So just keep your eyes on XLE seasonally. Well, this is the time when you'd see lows and also an accumulation of energy stocks. Do I think it was Ukraine that did it or not? It's whenever something like this happens, I always look at it from different perspectives. What is the benefit of a drone strike on the Kremlin? Number one, what's the chances of you killing Putin? Probably zero. Next to zero. I think if you bomb the Kremlin, if you were to like kill him, probably next to zero, or low percentage, not zero, probably 10% chance, maybe 30. So the question then comes into who did the drone strike and why? Some motivation for it. So if you were to if you were to ask me like, should we do a drone strike on the Kremlin? I'd be like, no. Would you attempt to get Putin? Yeah, but not a drone strike on the Kremlin. You'd have to like know in advance that he was somewhere. So he's not dead, right? So we know that it's not someone internally that knew where he was to get him. We know that it wasn't Ukraine that knew where he was. So you have to think about that drone strike is likely intended to create a validation to ramp or escalate war with Ukraine. So it's probably something internal. It's likely something internal. Or it's someone that's dissatisfied within the Russian Federation. Or someone else. It could be someone that's dissatisfied, a Ukrainian in Russia or somebody that's dissatisfied. But to say it was Ukraine doing it, probably not. If Ukraine was going to try to assassinate Putin, trust me, it wouldn't be just something haphazard. There'd be a high probability of that happening. So, yeah, I agree with what's being said. Sounds like bullshit. So that's on the Ukraine stuff. Wall Street is betting that the regional bank crisis isn't over yet. Yeah, I don't think it is either. I think that's all staged at this point, personally. Seeing some talk about Tesla right now. Natty gas down by 5%. And we talked about natty gas this morning. Hold on, I got it. Hold on a second here. I'm looking at premature. Hold on a second here. On SPY, we've got someone slipped in 102,000 calls on 412C for $1.78. Someone's betting on a rip right now. I'm reading Peru Sexine is out there going 200 years of history suggests hard landings coming. He should post a war on there. A concurrent chart with wars too. Hard landing coming, baby. I was watching someone on YouTube had a chart out. It was like a 100-year chart on the inverted yield curve or something. And I was like, and he's got it up next to like a 1 month SPY chart, SPX chart. And I was like, what are you doing? I was like, you're not showing like how SPY has gone up relentlessly for an entire year or 3 years or 5 years before it rolled over. Some of the insane shit that I see out there. Dude, I gotta put VolWiz on my I have VolWiz on my this tweet deck that I have open doesn't have him on there. I gotta put his ass on there. I don't know why he's not on there. Had my boy Scott in here. All I want is like, so all I want right now is, I want like that one, like that like 130 dip down here. I want to buy that rip right there. Part of me is like, just buy some puts and some calls, like some zero dates, and cash out the puts down here and cash out the calls up here. Like, I'm like, yeah, I'll just manage both sides of it. And then I'm like, maybe I'm too lazy to do both of those. Let me check the implied move in the back end here. An expected move one more time. see if it's changed. On the SPY. Oh, that's interesting. 1.1% move by tomorrow. I should just put a taste of it on. Like looking at this right now, I just want to start buying it. But then I'm like, normally in this situation, I'll buy this. And I'm like, we're going right there before we even get to 2 o'clock. The moment I execute that trade, we roll down and then we go up. It's like the tease. My ball in 414 Cs. XLE with a buy right now. I know, I just want to touch. I mean, it's so tempting right here. It's so tempting right now. Like, I just want this so bad. I do. I just want to buy this right now. Like, I want to put the risk on right now, and I'm like, just be patient. Watch me miss it. I'll probably end up missing this. My rules are telling me to wait for this. That's what my rules are telling me to do. My gambler is like, just start buying it now. Half gambler is saying buy this trade right now and then add to it for here. That's what the gambler in me is telling me. Just the tip. That I'm telling you, that's what I'm thinking right now. Catch the face ripper up. Get out before the get out before the presser. Call it a day. Alexa, play CNBC.
CNBC for 2 minutes.
Kramer's calling for a fat pivot today, huh? Yeah, there's some of it. Those 414s now are $1.01. I'm like, oh, man. Trust me, I'm feeling it. Like, I'm getting that itch right now. Yeah, I can't stand averaging down, Tony. Like, man, I'm like, I hate averaging down. Squeezing up to the trigger right now. Three trigger cluster right here. It's so tempting right now. Like, normally I'd be all over this trade. I want it so bad. Like, this is the perfect setup right here. We have a bull plane on the 5 minutes on the 27 and 113 EMA. And we have the hourly trigger starting to get squeezy. 12:52, 8 minutes left for a new high on the SPY. Yeah, I can't do it. I already know that, like, I mean, I know it's gonna. Me not buying calls means it's gonna rip faces. If I was loaded to the boat right now, we'd roll right over down here and then we'd go up. Hourly velocity is good on the SPY right now. Hourly velocity is very bullish right now. Trading 412.05. 414C's trade $1.06. It's a quick 10% trade, even if you just got out here. I didn't get into that trade. I should have, but I didn't. Same Winky, or same Binky. I'm waiting on the attorneys, Winky. Winky, I'm waiting on the attorneys, and Binky, loved having you today. I mean, that's all I want, right? I just want that. I just want that little bit of, like, panic down here, and then that rip. Watch him just front run it. Go straight up. Patience, old man. So, like, the brain is like, how this, like, it's just trader psychology. Like, I have to, and my head's telling me right now, I've got, like, the devil and the angel, and the devil's like, do it. And the angel's like, there's always another trade. Yeah, 5 minutes. 5 minutes on its first bar right now. If you're looking on a 30-minute chart right here, I'll bring it up for you. There's your, this is the bearish, right? Bearish hourly velocity. Hourly velocity is turning up. 5-minute velocity, 30-minute chart, turning up as well. So on the half hour, the hourly, it's there. It's ready to go. SPY trying to break above the hourly trigger. Whole lot of space to return to the seat of the crime, man. Woof. Right up here, 414.79. Yeah, I think we go up. I think the only way we go down here is if, I think the only way we can go down is 50 BPS, 25 BPS with no talk of pause. Maybe the presser or Yellen coming out of nowhere. Those are the only, like, things that I see for us not going up here. If I was a hedge fund, I would not want to be actively shorting the press release coming out. Too risky. There's so many fights they could win. This is too risky. Well, that's my own view, but if I were to take a risk assessment for being short heading into this thing, my answer is fuck no. Could it get front run right now? Yeah, there's a high probability of it. Between now and 1:30. Like 11:30, 1:30 are two key time frames for me on these events. Like they matter. You got the JPM caller, man, 4:30, right? They got to pay for their downside protection. Squeezing the 412.06. Bull plane coming into you right now. Bull plane on the hourly trigger. You return to the scene of the crime, man. That's up at this red yellow line right here. Turn to the scene of the crime is where my cursor is right now. 412 and change. Squeezing right now. Pushing hard on sell side. Trading 412 and 10 cents, 11 cents, 13 cents, back down 8 cents. Yeah, BBY at 7 cents. Yeah, I can. They have front run these in the past. You really need some bad news, man, for this shit to come down. Here, I'll show you something that was posted on FinTwit this morning. JPM's game plan on Fed Day. The bank's trading desk offers scenario analysis for Fed's policy decision. Rates cut. Probability less than 1%. Up as much as 2.5%. No hike and pause. Up as much as 1.5%. There's only a 5% chance of that happening. Hike and pause. 55% chance. Up 0.5% to 1%. Hike and continue. That's we hike today, and then you get the hawkish J Powell with no talk on a pause. 45% chance, down 0.75 to 1.25. It's worse than Vegas. Yeah, rate cut, you do. So a rate cut, you would get an initial reaction move up for liquidity. Same with a end of war with Ukraine. You get an initial reaction 100 to 300 points. Would not be good in the long term. Trading 412.18 right now. $1.07 on 414Cs. They were at 98 cents. Or 89 cents, I think they were. I think they were 89 cents when we called it out. 412.25. Some upside targets for you into the decision. Good news, high probability, price target right there. Downside targets. See your daily trigger down here? This is your first price target on the downside right here. So if you're going to go both sides of the trade, if you're going to take both sides, straddle the market with some cheap puts and calls on the upside and the downside. One thing I want to warn you about, mute. Alexa, pause. Alexa, turn off. Okay, so a couple things I want you to be aware of, or a few notes here, programming notes. We're going to get serious now. Gap down here. Like a whole bunch of stuff I got to talk to you about. So you may not hit the second price target on the up and down side until later in the week. Could be like if your strategy is when do we hit PT2 on the up or down side? Could be today, could be tomorrow. They wipe out the 0 dates and then we get there. Okay, be conscious of that. Take some notes. Another thing to consider here. We tend to have vol. Let's say we go up here, right? The dealers will tend to fail the first trip up to tag this, and they'll reprice the options market. Then we'll go up and tag it. Then we'll go up here and tag this sometimes. But I want you to realize that once the event fall comes off, options get repriced. Be aware of options being repriced after the event. After the news is released. Second and third thing that I want you to be aware of here is that sometimes we get weakness into just before the news is dropped. So any kind of a push up before we get there would be met with some kind of weakness. If we don't get up there now and they don't front run it, we could still see weakness into that 2 o'clock hour for that shot higher. Whatever trip is made north here will be muted or not guaranteed. If the news is really good, maybe not. But if it's really good news, we could go up here, but then come back down for that presser. And also, if we're blasting off, man, and all the news is good, all you need is one person to ask the right question, and this market will turn right around. Same thing goes for the downside. If the press release at 2 p.m. is bad, and then J Powell comes out, I've seen him. He has no problem coming out and continuing with the negative messaging. So be conscious of that. To the downside is more risk for hitting that PT2 today. Those targets down below 406.01, 405.48. Generally in that area, I'm going to go with 405.48. The idea here is if you're going to do a straddle, maybe you take that straddle slightly below or in the money or not a straddle. I'm talking about strangle. Like pull in your strikes or put more time on it. You can also go with a strangle or a straddle that's some kind of a spread strategy, or you can cut sides loose and hold on to them so that they do ultimately print down the road. Sometimes we have a tendency to hit the targets lower or higher and then come back and revisit the downside farther out in time. If you don't play these things, I understand. There's so many better trading days. I'm going to warn you of a couple things. If you're a new trader or if you're a poor trader, this is not the event for you. This is these events, you just watch them. You can paper trade it or whatever, but a lot of people lose a lot of money. If you can't lose money on these events, you shouldn't be. This is like going to Vegas and saying, I can blow $1,000. If it doesn't go my way, I'm not going to kick myself over it. And make sure you're taking profit. Like, I got to tell you, man, like it can be going straight up and it'll just fail on you before you get in the money. If you come out of this with up 10% in the day, it's as good as being up 3,000%. If you break even, it's not a bad day in the market. Be warned of all that stuff. I tell people all the time in these events, there's no shame in not trading these events. None. They're like the whole hindsight 2020 thing, like, oh, I would have made so much money. That thought goes away tomorrow. You'll be on to the next trade. If you're not a fast trader, if you haven't done this 1,000 times, you can get your arms twisted sideways. You really need to be fast. Don't rely upon me ever for your entries, especially in these things. YouTube delay is up to 14 seconds. So if you want to speed up your playback right before this stuff begins to happen, so that you're in real time with me, I also recommend that you join us on Twitch. Their delay is no more than 4 seconds. You never have to speed up the playback. If you look down there, I have explainers on how to speed up your YouTube playback so that you're real time with me as this event unfolds. The last thing I would say to you would be, or a couple last things would be, you can always trade the reaction too. If the market tends to blast down, you can take the opposite side of that trade or the continuation down. If the market slams up higher, you can sell down so that we come back up again with more news, right? You don't always have to take this trade. You can actually take the reaction trade. Always something good to do is take a reaction trade. We actually put a reaction trade on yesterday, right? We waited until it was done going down. We knew where the bottom was, and we said, we're going long here. Easy trade, easy money. If you want what I think happens today, we go up. Ultimately, that's what I think. We go up. We have to be hit with a whammy. There has to be some kind of a surprise that we don't know about for us not to go up. Yeah, no pee breaks allowed. I'm done peeing. Not the time to take a walk. 1:13 in the afternoon. We only have 47 minutes left until it drops. I'm interested to see what happens here on the 15-minute. Let's check the 1 minute out and see what that looks like. Oh, yeah. Look at that right there, baby. 1 minute chart right there. PT1 on both sides. Maybe Winky could put a poll out right now. See if I can go over there and find I was off the I suck at polls, man. I'm like doing it on live or on Streamlabs on my end and the back end here. I don't know why I can't do a poll right now. I have to watch a YouTube video on how to do it on both streams. You guys are funny. I'm reading it. Winky, you want to ask these guys, like, do they think 25 BPS and continuation? I guess the four questions would be, let me read them again. Rate cut. What do you think happens? Rate cut, no hike and pause, hike and pause, hike and continue. Those are the four questions. Rate cut, no hike and pause, hike and pause, hike and continue. I'm going with I'll say it one more time. Rate cut, no hike and pause, hike and pause, hike and continue. I'm going with hike and pause. That's my answer. 25 BPS, initial move down, but then they're reading it and it says pause and it blasts up. Then J. Powell comes out and tries to talk the market down. Most probable. Thanks, brother. Appreciate it, Wink. Whatever screws my portfolio hardest. 45 minutes until a major crash in the queues. Let me take a look around, too. I'm going to check all the sectors out right now. Foresight Finances give me that. I'm like, yeah, I got to go around and take a walk around the market. See what Dixie's doing. Oh, yeah, look at Dixie. Dixie's like, I'm ready to fuck right now. My kid's not here, by the way. Dixie's like, I want to fuck. Look at Dixie. Dixie's like, I'm here to party. Dixie does not look good for the Bulls right now. The HYG looks good for the Bulls. It doesn't look bad for the Bulls. It's got some room to close a gap down below at $74. What's that XLF saying? We need XLF to pull its pants up here. You know, I'll tell you what, man. XLF better pull its pants up. XLK. Yeah, it's okay. XLY. Yeah. XLC. How's Dr. Copper doing, by the way? Look at XLC. It's disgusting. The VIX. Yeah. Tell you what, any rip looks like it's going to be muted. Just looking around the market. BBY just went up 22%. Gotta rub some salt in the wounds. Let's look at the Qs. Yeah, Qs look okay so far. SPY still continuing to squeeze here. Trading 412.22. Yeah, Meta. I bet everybody's talking about Meta. I'm getting a lot of text messages about it right now. APRN. Nice. We have a poll right now. I think you press exclamation point and then type in vote. Exclamation point and vote, and you can vote in the poll. We'll close that poll at 1:30. So you have 11 minutes. Please do your part. Community, so I want to tell you guys, our community does a pretty good job. Better than average. When we started this community, I thought our polling would be like everybody else's polling. It would just be like you just trade against it. You fade it. Our polls are like spot on 70% of the time. So it's I vote. Same thing. You should be able to do I vote. Man, I want to buy that so bad. 414Cs, baby. Widen that out for you. Let's get some sexiness going here for you. Get some of that porn going. Oh, dude, I gotta get some music lined up for the Bears. The Bears. You know what's funny too is I've got music just for Tesla. I've got the Tesla waiting music. So I got the music queued up if we start bloodbathing it. For the Bears. The Bears. Bear down, bear down. This is all I want. I'm going to show you exactly what I want. I'm going to show you guys what I want. Ooh. What time is it? 1:30 right there. I want to retest right there. That's what I want. I want to trap all these bulls. I want them to capitulate and sell me their calls. I'll even make it lower, like right there. That's what I want, right? Just like that. That's what I want. Right there. Let's see. Oh, yeah, right there. This is what I want. I don't know if I get that, but turn that off. Turn that off. Turn that off. You guys already know what's up. I want that weakness. I want it so bad. I want that bull trap you in. I don't think I'm going to get it though. I don't think I get it. I'm getting left behind. Self-doubt. So I guess if we came down here, I'd probably want to buy, I was saying I want to buy 4 14s, but I'd probably want to buy like 4 10s or something. I'm looking at 412s. So I've got a trade lined up on 412C. They're $1.96, but I want to pay $1 for them. I want them to lose half their value. It's terrible to even say that. Some of you are probably long calls right now. And you're like, why is he saying this stuff? Hold on one second here. All right, hang tight here. I'm going to turn up the audio from the squawk so that you guys have that. Four minutes left. We'll close that poll. Beginning to squeeze higher right now. Bull cross down below in the 1 minute. Previous high back over here from earlier in the day. Huge gap to fill above. 5-minute cross right here. There it is right there. All signs pointing to up right now. Squeezing, trading 412, 48, 52 for the moment, up to the previous high. 412.65, trying to get up there. Big giant green balls, baby. You vote by typing in exclamation point vote. Type the letters exclamation point VOTE. One minute left for you to vote out there. Nick Timmeros earlier in the week hinting towards a pause, if not a cut. He even used that verbiage in his article. Hedge funds coming out earlier in that article begging Jerome Powell to be hawkish in his presser. For the market not to run out of control higher. Sell-side hedge funds falling back right now. Taking their hedges off on the risk to the upside, not the downside. Squeezing 412.54. Bear music queued up in the background. Looking to retest the previous high from earlier this morning at 412.66. 65, actually. All right, Winky, you want to show the results, brother? Winky, you want to show the results or what, my man? Thanks for voting, Trevor Battenberg. What do we got for results out there? I'm going to give a shout out to Jay Noob that followed on Twitch, Trevor Battenberg, Jacob Shinobi, World Loser. Twitch has some great names. Wheels the Caliph, D Hoops Forever, Mission P for subscribing, 777. Kula Way Strippin'. Kula? Is that Kula? I'm from out west. Is that like Kulo? Colorway Strippin'. Moose City 77.7, baby. Haltia. Who else is out there? XX Shiniga Mix. XX. Osama Bin Laden 422, baby. Bez D followed. Broken Pathfinder followed. Ben Godfrey, baby. He's in the house today. Ben Godfrey, if you're out there, I love you, man. Keep the good fight going up there in Montana, baby. Bullshit, baby. What up, my man? Side PCT, Dark Knight, 2119-2920. If you're finding these streams, this community helps you out in your trading, If you're a new trader, if you've just joining us for the first time, join us in Discord. This is a free sub, free community to join. Great people. We've got a website launching and tools launching here shortly, being developed right now by a big tech company's artificial intelligence engineer. That is no joke. If you're making money, please consider supporting the channel. If you're a poor trader, just like and subscribe. Find us on FinTwit. You just Google search CaptainJimJames Twitter. My name will come up. There's a Discord invite for you on FinTwit. Or excuse me, a Discord invite for you in the chat on YouTube and Twitch. If any of you want to support the channel with monetarily or the Discord or whatever, monetarily, the most direct way to do it where YouTube and all the, like YouTube, nobody takes the money or takes a cut. Here's a link for that. To directly support the stream and the Discord and everything that we're doing in the background. If you're just joining us right now, we've got two upside targets here, PT1, PT2. We have two downside targets right here, this yellow box. This is the hourly trigger. PT2 is the gap below. A lot of penis, I guess if you're a woman too, penis or booby swinging out there, saying that the only way for us to go is up today. I always cringe when I hear that stuff. I don't like hearing that. I don't like everybody saying we're going up today. This little thing that I got here is what I'm hoping for. I'm hoping for some weakness into the press release, but I can pick up some calls to go up. I might get run over. You could see hedge funds take the hedge off before we even get there, and we just start squeezing up relentlessly if that is the case. I might end up, believe it or not, I don't miss too many of these events taking a trade. I might end up missing one today. Maybe one of the rare ones that I miss. I need my rules to be, under normal circumstances, I would have been in this trade way down here. But today, I'd be breaking some of my rules. So what was the results? Who has the results for the poll? I'm not seeing the poll results anywhere. Anybody know what the poll results were? What we have seen ramps. So like at 1:30 in the past, hedge funds will take a hedge off if they think we're going up. If there's risk, and today there's high risk of us going up. So they probably have an itchy finger, right? I would have an itchy finger that we have a high risk of going up. So, is it worth even risking hedging this event? Probably not to some extent. You can always put it on if there's bad news. Like you read the report, then you go, you put the hedge back on. We have seen some of these events in the past. Hedge comes off before we even get to the release. They might even have access to it before we do. So Winky's saying the hike and continue was the most voted option of the poll. Holy shit. The bears love our stream. Holy shit. We got a lot of bears out there today. Okay. I actually don't hate bears. Any of you that know me know that I love bears, to be honest. I'm always trying to help a bear out. Publicly, though, on Twitter, they act like they hate me. You think that's the best scenario? So 53% of you think we're getting a hike, and there will be no discussion of a pause. That's fascinating. That's fascinating. That's good. I mean, hey, I gotta be honest. 70%, about 70% of the time, you guys are right. So I'm gonna put some weight on that. I'm not I gotta say, man, like I'm gonna go with you guys on that. You can't message on Discord. Let me find out why that is. Let me find out right now. Let me see if you somebody can answer that for you. Hold on. I will find out right now why you can't message. Hold on. Hold on, I'm gonna find out right now. Hold on, let me find out what's going on. Yeah, that's what I think it is too, Winky. I think it's because they did not read the rules and accept the rules. That's what I think it is. I have an agreement with Winky, but I'm going to find out right now. High can continue, as Bianco is saying. Okay. Don't worry, Jared. I got you, brother. We'll find out right now. Oh, wait a minute. We got Chase in the house. Hey, Chase. Good to see you, brother. No options for today or tomorrow. Look attractive, too expensive. Yeah, Chase, I was noticing that too, man. I got my eyes on 412s if they can come down to like $1 or something. A lot of good comments right now on Twitch and YouTube. Big Ball Z is saying, read the rules and click the shocker emoji. Hey, you ex-boyfriend, how you doing, my man? Good to see you. We had a question above. Jared asked, why can't I comment or post in the Discord? And I figured they didn't read the rules and accept them. Is that probably what's going on? How you doing, man? Good to see you, ex-boyfriend. YMB, baby. So YMB is asking, or YWB is at. So your wife's boyfriend is asking right now, Jared, what is your handle in in Discord? I appreciate it. Your wife's boyfriend, what's your take, man? I want to know what's up. This guy, this is the admin for our Discord right here. Very smart trader. Wife's boyfriend, dude. Tell us right now, what do you think? Do we have, I'm going to ask you a question, you wife's boyfriend. Give us your, I'm ready. Here's the question for you. You ready for it? All right, here it goes. Do you think we get a rate cut? No hike and pause. Hike and pause. Hike and continue. I'll ask one more time. Rate cut.
You can trade the FOMC rate decision with us live. Our very own Tony is currently live on YouTube. He's gone over some fundamental prep. You can still watch back on that.
Rate cut. No hike and pause. No hike and pause. Hike and pause. Hike and continue.
20 minutes away now.
The chat, both chats are saying that we're going to hike and continue.
From analysts here. So BlackRock, they do note that income is back as a portfolio driver.
He's in YouTube right now. Your wife's boyfriend's in YouTube right now.
Market volatility. So BlackRock says that in the US, it's now evident in the financial cracks emerging from higher interest rates on top of rate-sensitive sectors. So BlackRock don't see major central banks coming to the rescue of the economy with rate cuts this year. And they see the Federal Reserve and ECB hiking rates again this week. Of course, we did see the ECB do that already as a growth that takes a hit. So they do also comment on the US 2-year Treasury yield, which is back near 4%, even as the market eyes a Fed rate hike this week. And the US PCE data they cite as well, which showed consumer spending losing momentum over the course of the first quarter, and strong US wage growth, pointing to inflation settling well above 2% policy target, which is why BlackRock believe hopes for rate cuts this year are misplaced.
Your wife's boyfriend saying stays the course. He's with everybody on this one. This is fascinating to hear. Like, I like every talking head saying we were going up. That our chat is saying no. Counter that argument. People I trust. And I trust our opinion polls. Like, our opinion polls are, I mean, they're not always right. Even if they were wrong today, a lot of the time they're right. Like, our traders are fucking awesome traders, so I'm a little skeptical of everyone coming out and saying we're going to blast off here. It seems too easy to me. I'm smelling like too easy. Smart man saying hike 25 BPS, another couple small bank fails, then pause. Thanks to your wife's boyfriend saying that he hooked up Jared on Discord. Thanks, your wife's boyfriend, brother. Good to see you in the chat, man. People are asking about you on Twitch. You might have to put us on a split screen wraparound TV in the office there. All I want is a dip. Just give me a dip. Just give me like a panic dip and a 2 o'clock. Give me a panic dip to buy, baby. How about Mero? Is he out there? Where's Mero? We gotta get Mero in here. Hold on, let me find Mero. We gotta get the gang in here right now. We need Mero in the house. I need to see some chat from Mero, my brother. Oh, your wife's boyfriend's dropping some night. You know what? Your wife's boyfriend, we're gonna bring this up in the stream today, man. He just sent me a link. We'll discuss this in stream. You guys want to see the JPM prediction? Here, I'll bring the prediction over for you. Come on down, baby. Come on down there to daddy. Come on down to daddy. Come on down. Show me that weakness, baby. Come on down to daddy down there. Get your weakness on right now. There it is right there. There's your, you guys want to read it? Read it and weep. All right, I'm going to take that one down now just so you can see. Come on down to daddy, baby. Come on down. Come on down to daddy. Get your weakness on. Get on down there, you dirty girl. Follow that white line down there. Go ahead. You can do it. Get on down there for daddy. Come on down there, trap them bulls in. Have them sell their cheap calls to daddy. Come on down. Yeah, come on down. Get yourself weak down there. Come on down for daddy. Probably got some other streamers out there monitoring our program right now. Where's Mero, dude? You know Mero's at his desk right now. I want Mero. Coming on stream? Is he coming on stream or what? Oh, yeah, there goes your wife's boyfriend's now in Twitch. Oh, there he is, dude. There he is. He's dude, get on stream, bruh. Oh, we got Miro's, well, we're talking to Miro right now on FinTwit. Hopefully he'll join us on YouTube. I told him that we got thousands of people waiting for him to show up. Come on down for daddy down here. Come on down. Show me that weakness at 2 o'clock. We want to hear what Mero has to say. Because I know Mero's got the knowledge, man. Mero's going to drop the... Oh, here we go. We're watching some liquidity evaporate in the market currently right now on Bookmap. 150, 10 minutes left. PT1 on the upside, PT2 on one on the downside right here. I got the bear music queued up for the bears. We're on the 1 minute right now. I'm going to show you the 5 minute really quick so you can see it. There's PT1 right here, PT2 right here. So we are now on the downside.
On the top of the hour and the release of the headline event for the day and the week. The
here and here.
Decision. Median forecast is a 25 basis point hike to 5.25% from the prior 5%.
I don't think Daddy's going to get his weakness, man. Daddy's not getting it.
They say that inflation remains unacceptably high, but banking stresses are leading to a tightening of lending conditions, which will do more to slow the economy.
Where's Mero? I want Mero.
While the Fed will leave the door ajar for further hikes, the need for a higher policy rate is highly questionable, according to ING. So ING themselves expect 100 basis points of cuts before the year end and do think that this will mark the end of the Fed's tightening cycle today. But the central bank will be reluctant to explicitly state that, ING thinks. So last month, it did switch its language from February's ongoing increases in the target range will be appropriate to, quote unquote, some additional policy firming may be appropriate. So inflation has continued to run hot and the jobs market is tight, while the first quarter GDP was headlined by stronger consumer spending. So ING adds that Federal Reserve officials' comments have little changed over the past month, other than hints that the impact of credit conditions is being more readily acknowledged, with some officials, including the likes of Atlanta Fed President Bostic, openly talking about one more hike and then a pause.
Be patient, Daddy. Hey, Mero's in the house. Dude, Mero's here. He's on YouTube. Mero, dude, what up, my brother?
Stop as it did in January of 2019.
Dude, my man is here right now.
Quote unquote patient.
Mero, dude.
The previous month's warning.
Good to see you, bro.
To expect some further gradual increase.
Missed you, my man. How you been?
I think this is because recessionary forces are building rapidly, which will lead to rising unemployment and inflation falling quickly enough through late 2023 into next year as well.
Mero, dude, we got everybody waiting on you. What's the word, bro? I'm gonna ask Mero, ready? We're gonna ask Mero, right? All right, Mero, question. Fed rate decision. 4 choices. Choice 1, rate cut. Choice 2, no hike and pause. Choice 3, hike and pause. Choice 4, hike and continue. Rate cut, no hike and pause, hike and pause, hike and continue. Rate cut, no hike and a pause. Hike 25 BPS and a pause. Hike 25 BPS and continue hiking. Dude, I love Mero, dude. He's my man, dude. The guy's saved my ass more times than I can count. He saved our whole gang. Mero is like, when the shit gets thick, we call on Mero. Oh, Johnny boy, Johnny Haggerty. Yeah, we all want to hear what Mero... Dude, I know Mero's got his finger on that sell button right now. Hey, Lord Pente, how are you, brother? I just want that dip, dude. I just want that, like... All I want is that fast red bar down. I want that, like, woof. Just before it's released. I want it digested for a few minutes and then boom. Yeah, Mero, I was wondering, man. My question to you specifically, Mero, is is there more risk to the upside of being short, being sell side right now? Like, or is, like, you know what I mean? Like normally on one of these rate decisions, I'd be like, fuck no, you're short into this no matter what. And then this one right here, I'm like, I don't know. Maybe it's better to short after. Like, you let that shit release and then you just jump in. Now you can see the hedge right now. But I don't know. I guess just like so much shit out there right now. Liquidity drying up the market currently. 5 minutes. Yeah, Mero, I agree, man. Yeah, you got that long head, dude. I know. That's why I'm like, the other side of that trade, man. Like, there's real risk to the upside with, like, you got all kinds of crazy people out there saying, like, we're getting rate cut. Not crazy, but just we're getting rate cuts. Our chat today is saying 25 BPS and continuation. You're going to get 25 BPS and hawkish talk in the presser and inside of the not the presser, but the release and the presser. Yeah, I saw that Kramer stuff. It's not just Kramer, man. Even JPM. Yeah, man. Mero, dude, I'm on the sidelines right now. I'm normally in a position at this point. I'm not. I'm flat right now. I want to be in some calls. And I'm not. I'm flat right now. It's very rare that I'm not already in a position. But I'm not. Three minutes. I'm going to be quiet as the squawk comes out. I know I must be in position. I've got a trade lined up, but I'm not in it, man. I want to be like, so Mirror, I want to be in calls, man. I wanted to be calls back down here, like way over there, and I'm like, I just ain't doing it. Yeah, I like straddles here too. If you can manage them, I like them. I like strangles and straddles here. Two minutes until the release. If you're just joining us right now, our poll says 25 BPS and continuation.
One minute remaining now. Ten seconds.
Here we go, baby.
Hike 25 basis points, hike 25 basis point, hike to 5.25% as expected. So the Fed drops the language that it anticipates more policy firming may be appropriate to attain a sufficiently restrictive stance. The Fed drops that language in the rate. So the Fed opens the door to a rate hike pause. So again, Fed opens the door to a rate hike pause. So the Fed says that in determining the extent to which additional policy firming may be appropriate, it will take into account the tightening to date, policy lags, and other developments. Repeats that the US banking system is sound and resilient. So it says in determining the extent to which additional policy firming is appropriate, again, is taking into account the tightening to date and other developments. So Fed says tighter credit conditions are likely to weigh on the economy, hiring and inflation. Says that job gains have been robust, inflation remains elevated. Fed adds that it will continue reducing its balance sheet as planned, and the Fed adds that the vote in favor of the policy change today was unanimous. As I look into the markets here, did see some weakness in the US dollar, a little bit of whipsawing happening now in the S&P 500 and gold as well, seeing a similar reaction. So again, just to repeat some of the key notes from the Fed statement here is the Fed did open the door to a rate hike pause here as they dropped the language that it anticipates more policy firming may be appropriate in order to attain sufficiently restrictive stance. So noting now as well the US Treasury 2 to 10-year curve moderately lessens inversion, last at around 53.9 basis points after the Fed raises rates there by 25 basis points as expected broadly.
All right, I'm long here. Now sink the Ponzi. I know. We will continue. The Fed is saying we will continue. Let me see if we can read some of this. I got the statement here. Let me start see if I can read some of this to you.
FOMC rate statement on the feed for those interested.
We can get this up in the background. Here is the statement right here. I'm going to read it to you. Economic activity expanded at a modest pace in the first quarter. Job gains have been robust in recent months. And the unemployment rate has remained low. Inflation remains elevated. The U.S. banking system is sound and resilient. Tighter credit conditions for households and businesses are likely to weigh on economic activity, hiring, and inflation. The extent of these effects. The extent of these effects, where are we at here, remains uncertain. The committee remains highly attentive to inflation risks. The committee seeks to achieve maximum employment and inflation at the rate of 2% over the longer run. In support of these goals, the committee decided to raise target range for the Fed funds rate to 5 to 5.25%. The committee will closely monitor incoming information and assess the implications for monetary policy. In determining the extent to which additional policy firming may be appropriate to return inflation at 2% over time, the committee will take into account the cumulative tightening of monetary policy, the lags with which monetary policy affects economic activity and inflation, and economic and financial developments. In addition, the committee will continue reducing its holdings of Treasury securities and agency debt and agency mortgage-backed securities, as described in its previously announced plans. The committee is strongly committed to returning inflation to its 2% objective. In assessing the appropriate stance of monetary policy, the committee will continue to monitor the implications of incoming information for economic outlook. The committee will be prepared to adjust the stance of monetary policy as appropriate if risks emerge that could impede the attainment of the committee's goals. The committee's assessment will take into account a wide range of information, including readings on labor market conditions, inflation pressures and inflation expectations, and financial and international developments. International developments. That is the war, right? Voting for monetary policy action was J. Powell, Williams, Barr, Bowman, Cook, Goolsbee, Harker, Jefferson, Kashkari, Logan, and Waller. U.S. rate futures showing traders pricing in rate cuts in September. That would stay along with Timros stating that we would pause throughout the summer here. You get 25 BPS with a pause for the summer months. U.S. interest rates futures price in pause in June-July meeting. See if I can read anything else here. The vote was unanimous, by the way.
So Fed swaps also, they are still maintaining the amount of easing seen by the year end.
So you get 25 BPS. You're getting a summer pause, right? We talked about what Tim Rose said in his article. You're getting no more rate hikes through the summer. And they're saying that the next rate hike that they'll look at is in September. That's the gist of it. Now, there are some... there is some counter here saying that the rate futures are showing a rate cut in September. Dip bought on Meta.
So Wall Street Journal's Tim Morales via Twitter says that the FOMC statement used language broadly similar to how officials concluded their interest rate increases in 2006, with no explicit promises of a pause or by retaining a bias to tighten.
Still sitting here. I'm on 414 Cs. Yeah, it sounds like the Ponzi continues, doesn't it? Yeah, I like Dash too. Now we have Jerome Powell coming out at 2:30 p.m. for the actual presser. We'll play that live for you. I'm going to cue that up right now. So we'll play Jerome Powell's presser here at 2:30 p.m. the next 20 minutes. We'll see if he gets the nasty questions here or not. Yeah, we need more week over week 401k money. Yeah, AMD. Yeah, I'm looking to enter AMD next few days. If I can get into it in like next 2-3 days, I'm definitely going to take a long. We got to take like a 2 or 3 month call on it. Yeah, you're short right now. You'll probably get down here for this presser. You're going to get the JPOW. You're going to get the JPOW presser short down here for sure. You're definitely getting Hawk JPOW. He's gonna come out here and tell you don't read too much into them taking out the pause language, right? We got 18 minutes left to wait until JPOW comes out. He's back there shuffling his paperwork. He's probably got Yellen sitting on standby over at CNBC. Has anybody heard from Yellen yet at any point? Should probably find out if Yellen is live anywhere. We look her up, make sure she's not giving an interview right now. Do they put her back in the closet? Yellen live. I'll just Google search Yellen live. She's probably on CNBC right now. Yeah, I'm in some calls here. I want to catch this rip higher. I don't know. If you're not in calls right, someone's asking about buying calls right now. You might want to wait for J-Pow to get done speaking here. He's gonna be hawkish. My assumption is he's gonna come out and try to talk the market down. He's gonna try to talk the market down. I'm sure there's like some guy out there in, I don't know, Nebraska or something, calling his broker and saying, "I've got $1 million that's been sitting in a savings account. Full port the market." What is dialing in from Turkish Republic of North Cyprus while on holiday? Hope you have holidays planned too. Any other bears besides Miro the Hero? We got a bunch of bears in here today, man. The bears today were saying 25 basis points and continuation. So far, the press release is stating that the language of continuation is gone from the press release. So Bears' only chance at this point is for Jerome Powell to come out, man, and be aggressively hawkish, or for a reporter to come out and ask the hard questions. Sometimes that'll get us down. But there's discussion, right? That they have to support the market because they don't want to see bank failure, infection everywhere. Good to see you. Sunday never ends. How you doing, bro? Where I'm at right now, man, we've got like delayed summer going on. We got delayed spring. Our spring is, matter of fact, I've got a garden. I don't know how my plants are still alive right now. We had snow, blowing wind, 32 degrees. My plants at the end of this year are going to be like thugs because they've made it through all this nonsense. Yeah, if you're not long calls here, you in 15 minutes. In 15 minutes, you could see a steep reversal here just on J-Pow talking. Like, usually it goes two ways. J-Pow either comes out and he's like fighting. He's like, fuck your calls. But if he isn't and he's bullish, there's always one reporter that comes out and is like, there's always one with like an unscripted question that pisses him off, and then he gets all hawked up. So you're going to see some volatility from, i.e., the point being, you're going to see volatility just from the presser. How he fights, how he tries to combat is, this is kind of positive. It's not like if we had like, this release, if you had like a range of Dove and Hawk, it's not neutral. It's definitely Dove. I'd give it like if 10 was Dove and full Dove, like Printer Go Burr, and I don't know, 1 was full J-Pow Hawk. As this plays out, it's probably on the side like I'd give it a 6 or a 7 in dovishness. 6 or a 7 in dovishness. And the people in the village had hailstones here. Apricot trees are a mess. No kidding. Yeah, hail is just very destructive. Yeah, I think that Binky made a very good point this morning that there's a lot of money on the sidelines that was waiting to deploy this month, and they were waiting for this announcement, right, to find out what the announcement was. Now, that doesn't take into account what the dealers are going to do to you. You get a bunch of money in the market, the dealers are going to counter that trade. The only way that the only time that dealers will take the trade with you is when they're overrun with bullishness. Then they have to follow along with you. So that'll be fascinating to see. I would expect, though, that dips get bought at this point. That dips get bought through the summer. The volatility that bears are going to be looking for. It's fascinating too in this presser. They're basically talking about the wars with China and with Ukraine. That's helping with the soft landing right now. Definitely, no one wants to talk about that, but they just did. I saw an article from the Washington Post yesterday about the Ukraine and Russia war, saying that their expectation is that there's no end in sight for at least a year. That lines up with the Fed into September. So they are buying time, and they are buying that, or trying to extend that soft landing. Trading 412.72 right now. Yeah, CL is another hint, right? CL is tanking, and that is hinting as well to the S&P 500 going up. Oh, that's another indicator that the S&P 500 should go up. Oh, Warren's on I got to turn it on. I hate listening to CNBC. I hate listening to CNBC, man. It's become more and more garbage. More and more garbage as time. I turned on CNBC last week, and I was like, "Holy shit!" Although I gotta give some love to my girl Becky over here. I gotta give some love to Becky. I got nothing bad to say about Becky. Best anchor on CNBC. Oh.
So just under 10 minutes now to the bottom of the hour, where we do get the FOMC press conference with Chair Powell. So the video for this is on the feed for anybody who'd like to tune in live.
Yeah, I'd like to. I got the video for you guys too. You guys will have the video on here in just a moment. 10 minutes.
TickStrike allows you to actually hear order flow in futures, forex, and stock instruments. Get a free trial at tickstrike.com.
I might cut myself loose here. I'm going to go flat right now. I'm going flat. I don't want to hear the J Powell shit. I don't want to hear J Powell like, I'm up a couple pennies. That's it. I don't want to hear J Powell getting all hawkish. I don't want to hear it. I want to buy the dip on his hawkishness. Yeah, Becky's awesome, man. Becky's like the classy Karen.
So
you know when Becky's pissed.
Can be confident in the banking system after the administration took action following the recent events.
We got in trouble with Chaz. Chaz and I and someone else was talking about her one night, and she came on Twitter and was like, "What are you guys talking about?" That's the closest I ever got. I've never met her anywhere either. I've never seen her out in the. I know she skis out west, but I've never seen her out west skiing. I used to be out west all the time. Like, I'd be out and about around town, never saw her. Wish I had. Please like and subscribe to these videos, man. Tell your friends. Find me on FinTwit. Join us in Discord. Free sub all the way around. Yeah, Lisa Bear. I used to date a girl named Lisa Bear. I wonder if that's the same Lisa Bear. I'm going to look her up right now. I used to date a girl named Lisa Bear from, she lives in New York now, I think, but. What is she on? She's on, hope this isn't her. I will laugh if she used to be the girl I used to date. Lisa? Oh, her nickname is Lisa Bear. I used to date a Lisa Bear. That's a true story. Lisa from Bloomberg. Oh, Abramovitz? Yeah. I should have stayed in those calls. I thought it was Lisa Bear. Joe Donut's in the house right now. Squeezing up right now before the presser. I'm flat right now. That's why I hate bears. There's no way I was marrying her. She was one of those. She was like one of those Nantucket Red girls. Her boyfriend was away in college, and she needed a pool boy. Pocahontas. I'm listening to her in the background right now. He's a bull? Yeah, I'm a bull. Oh, man. Yeah, I know. There was like this is when I was younger. This wasn't now. I was a young guy then. I didn't know what I was doing.
Share Powell. Videos to which is available on the feed for those interested.
She picked me. I didn't pick her. I was the I think she's still with him today too, here all these years later. Become a billionaire. I was like, whoa, do I know her? I swear I was the pool boy. She knew what she wanted. She took it. That's what rich people do. I didn't have any say. Oh, no. They're talking about Lisa from Bloomberg News. I was like, maybe that's her. You never know. Spy squeezing again. Someone asked me to get rid of PT1 earlier. I ain't getting rid of PT1. I told you earlier. Told you to have a failure. Say this every time we do one of these events. You'd have a failure to reach the PT. And then they would come back and get to the PT. You guys heard me say that earlier, right? Say this every time we do an event. They do a failure to hit the first PT. Then they reprice options. Then they come back and tag it. I'm still expecting, though, a roll here. I know what happens when J-Pow comes out. He's out. He's in the back room right now. He's like unzipping the leather face mask, pulling the red ball out of his mouth. It's all like wet and sloppy. Throws it on the table. Unzips his gimp suit. He's got Yellen back there with the whip and shit. Jamie's taking video for Pedophile Island. He's buttoning up his shirt right now, and he's watching the S&P 500 to see what the reaction is. And he's like, if we go to the moon, I'm going to be super hawk. And Yellen's like, shh. Got the finger on his mouth. It's like, shh, it's okay. They haven't pumped it yet. Just be cool. In that voice. Yellen's got her, like, deep voice on. He's out there doing his cufflinks up right now. This guy yelling down there, putting the socks on for him. She's like, "Are you sure you don't want me to go on CNBC? I can follow Warren if you want." No. There's no kids here right now. It's just me alone. I wouldn't be doing this with the kids here. She's gone. She was like, "I'm bored." 2 minutes left. Here comes the hedge, baby.
U.S. Senator Warren says Powell should be tightening Fed regulations.
Oh, dude, Warren, please. You liar. Couple minutes now. I'll have the live stream up for you. We'll comment on it as he speaks. I'll try to interpret whatever's said. Definitely a hedge in the market right now. You can see the liquidity drying up. Here comes the real show. Alexa, turn her off. Can't listen to her talk anymore. And I'm a Democrat. If any of you don't know, I'm a Democrat. I can't stand her. I can't, well, not just her. I can't stand most of these politicians. Especially when it comes to like monetary policy, I am fully enraged by the Senate, any politician in office having the ability to trade the stock market, and their family members. I got it completely against it. I'm not against it. I'm for it. You know how I'm for it? That they have to release right away. In our day and age, if they place a trade by end of day, it becomes public. I'd love to see that happen. I would love to see like their trades go public the same day before market close. Matter of fact, I guarantee there's software out there at the moment they place that trade or execute, not even execute, just order it through their broker. Moment that happens, it becomes public. Moment the trade is executed.
$2.23 a gallon, and gas.
Here we go.
Futures at $2.32. Fed's Powell says conditions in the banking sector have broadly improved.
Conditions in that sector have broadly improved since
adding again in the statement as well that U.S. banking system is sound and resilient, committed to learning the right
lessons. We will continue to monitor conditions in the sector. We're committed to learning the right lessons from this episode, and will work to prevent events like these from happening again. As a first step in that process, last week we released Vice Chair for Supervision Barr's review of the Federal Reserve's supervision and regulation of Silicon Valley Bank. The review's findings underscore the need to address our rules and supervisory practices to make for a stronger and more resilient banking system, and I'm confident that we will do so. From the perspective of monetary policy, our focus remains squarely on our dual mandate to promote maximum employment and stable prices for the American people. My colleagues and I understand the hardship that high inflation is causing, and we remain strongly committed to bringing inflation back down to our 2% goal. Price stability is the responsibility of the Federal Reserve. Without price stability, the economy does not work for anyone. In particular, without price stability, we will not achieve a sustained period of strong labor market conditions that benefit all. Today, the FOMC raised its policy interest rate by 1/4 percentage point. Since early last year, we've raised interest rates by a total of 5 percentage points in order to attain a stance of monetary policy that is sufficiently restrictive to return inflation to 2% over time. We are also continuing to reduce our securities holdings.
So he's reading to you what I read to you earlier right now, waiting for the actual question Q&A session.
Firming may be appropriate. I will have more to say about today's monetary policy actions after briefly reviewing economic developments. The U.S. economy slowed significantly last year, with real GDP rising at a below-trend pace of 0.9%. The pace of economic growth in the first quarter of this year continued to be modest at 1.1%, despite a pickup in consumer spending. Activity in the housing sector remains weak, largely reflecting higher mortgage rates. Higher interest rates and slower output growth also appear to be weighing on business fixed investment. The labor market remains very tight. Over the first 3 months of the year, job gains averaged 345,000 jobs per month. The unemployment rate remained very low in March at 3.5%. Even so, there are some signs that supply and demand in the labor market are coming back into better balance. The labor force participation rate has moved up in recent months, particularly for individuals aged 25 to 54 years. Nominal wage growth has shown some signs of easing, and job vacancies have declined so far this year. But overall, labor demand still substantially exceeds the supply of available workers. Inflation remains well above our longer run goal of 2%. Over the 12 months ending in March, total PCE prices rose 4.2%. Excluding the volatile food and energy categories, core PCE prices rose.
I'm waiting for the Q&A session right here.
Moderated somewhat since the middle of last year. Nonetheless, inflation pressures continue to run high, and the process of getting inflation back down to 2% has a long way to go. Despite elevated inflation, longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We are highly attentive to the risks that high inflation poses to both sides of our mandate, and we are strongly committed to returning inflation to our 2% objective. At today's meeting, the committee raised the target range for the federal funds rate by a 0.25 percentage point, bringing the target range to 5 to 5.25%. And we're continuing the process of significantly reducing our securities holdings. With today's action, we have raised interest rates by 5 percentage points in a little more than a year. We are seeing the effects of our policy tightening on demand in the most interest rate sensitive sectors of the economy, particularly housing and investment. It will take time, however, for the full effects of monetary restraint to be realized, especially on inflation. In addition, the economy is likely to face further headwinds from tighter credit conditions. Credit conditions had already been tightening over the past year or so in response to our policy actions and a softer economic outlook. But the strains that emerged in the banking sector in early March appear to be resulting in even tighter credit conditions for households and businesses. In turn, these tighter credit conditions are likely to weigh on economic activity, hiring, and inflation. The extent of these effects remains uncertain. In light of these uncertain headwinds, along with monetary policy restraint we've put in place, our future policy actions will depend on how events unfold. In determining the extent to which additional policy firming may be appropriate, in light of these uncertain headwinds, along with monetary policy restraint we've put in place, our future policy actions will depend on how events unfold. In determining the extent to which additional policy firming may be appropriate to return inflation to 2% over time, the committee will take into account the cumulative tightening of monetary policy, the lags with which monetary policy affects economic activity and inflation, and economic and financial developments. We will make that determination meeting by meeting based on the totality of incoming data and their implications for the outlook for economic activity and inflation. We are prepared to do more if greater monetary policy restraint is warranted. We remain committed to bringing inflation back down to our 2% goal and to keep our...
So I read this to you earlier already. He's looking kind of disheveled right now because he knows, you can see right now that he knows that they're pausing.
Low trend growth and some softening of labor market conditions. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. To conclude, we understand that our actions affect communities, families, and businesses across the country.
Man.
Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Thanks, Gina.
Hi, Gina Smilik, New York Times. Thanks for taking our questions. I wonder if you could tell us whether we should read the statement today as a suggestion that the committee is prepared to pause interest rate increases in June. And I also wonder
Big question.
if staff in any way revised their forecast for a mild recession from the March minutes? And if so, what a recession like what they're envisioning would look and feel like when it comes to, for example, the unemployment rate?
So, taking your question, of course, today our decision was to raise the federal funds rate by 25 basis points. A decision on a pause was not made today. You will have noticed that
no decision on a pause.
In the statement from March, we had a sentence that said the committee anticipates that some additional policy firming may be appropriate. That sentence is not in the statement anymore. We took that out. Instead, we're saying that in determining the extent to which additional policy firming may be appropriate to return inflation at 2% over time, the committee will take into account certain factors. So that's a meaningful change that we're no longer saying that we anticipate.
Dude, 412s are at $1.20, $1.12. Now they're up to $1.70.
Meeting by meeting, and we'll approach that question at the June meeting. So the staff's forecast is so. Let me start by saying that that's not my own most likely case, which is really that the economy will continue to grow at a modest rate this year. And I think that's, so different people in the committee have different forecasts. That's my own assessment of the most likely path. Staff produces its own forecast, and it's independent of the forecasts of the participants, which include the governors and the Reserve Bank presidents, of course. And we think this is a healthy thing, that the staff is writing down what they really think. They're not especially influenced by what the governors think, and vice versa. The governors are not taking what the staff says and just writing that down. So it's actually good that the staff and individual participants can have different perspectives. So broadly, the forecast was for a mild recession, and by that I would characterize as one in which the rise in unemployment is smaller than has been typical in modern era recessions. I wouldn't want to characterize the staff's forecast for this meeting. We'll leave that to the minutes, but broadly similar to that.
SPY cranking right now. There's two comments to note here, two big ones. Jerome Powell was very uncomfortable reading. It almost looked as though
But do you see any economics effects of even getting close to a default, and what type of situation would that look like?
So I wouldn't want to speculate specifically, but I will say this. These are fiscal policy matters, for starters, and they're for Congress and the administration, for the elected parts of the government to deal with, and they're really consigned to them.
I gotta cut in here and just say two things. He looked supremely uncomfortable. He's the Fed Chair Powell, man. Like, you're saying we're committed to getting inflation down to 2%. He knows that likely will never happen. He also knows that he's in an uphill battle in the fight that he's in probably for the next 1 to 3 years. He also knows that this could be the last time that he actually raises rates. If we have a credit crunch, stuff like that, the job could be done. Or in terms of damage done. That was not easy for him. And then the first question right off, was this a pause or not? Does the market believe that or not?
Government's not paying its bills.
And you can see the uncomfortableness in having to say these things.
Standoff. Did that affect today's monetary policy decision at all?
I wouldn't say that it did. It was, of course, it's something that came up. We talk a lot about risks to the outlook, and that come up. A number of people did raise that as a risk to the outlook.
They're really grilling him right now.
Monetary policy decision yet.
Steve.
Chairman, thank you. Yeah,
I don't know if it's kicking the can. There's a lot of you don't want his legacy to be this.
Tell us what the Federal Reserve Board did in the wake of that February presentation where you were informed that Silicon Valley Bank and other banks were experiencing interest rate risks. And can you tell me what supervisory actions you've done in the wake of the recent bank failures to make sure that banks are currently appropriately managing interest rate risk? And kind of part three, but it's all the same question here. Do you still think this separation principle, that monetary policy and supervision can be handled with different tools? Thank you.
Sure. So the February 14th presentation. I didn't remember it very well, but now, of course, I've gone back and looked at it very carefully. I did remember it. And what it was a general presentation. It was an informational briefing of the whole board, the entire board. I think all members were there. And it was about interest rate risk in the banks and lots of data. And there was one page on Silicon Valley Bank, which talked about the amount of losses mark-to-market losses they had in their portfolio. There was nothing in it about, that I recall anyway, about the risk of a bank run. So it was, I think the takeaway was they were going away to do an assessment, a horizontal assessment of banks. It wasn't presented as an urgent or alarming situation. It was presented as an informational, non-decisional kind of a thing, and I thought it was a good presentation, and as I said, did remember it. In terms of what we're doing, of course, I think banks themselves are many banks are now are attending to liquidity and taking opportunity now, really since the events of.
Boy, what a tightrope he's walking, man. Oof.
And you asked about the separation principle.
He's walking a tightrope. He doesn't usually do this.
But ultimately, it has its limits. I mean, I think in this particular case, we have found that the monetary policy tools and the financial stability tools are not in conflict. They're working well together. We've used our financial stability tools to support banks through our lending facilities, and at the same time, we've been able to use our monetary policy tools to foster maximum employment and price stability.
Yeah, I agree, Miro. The thing about, Miro's making a good, we talk about this point in stream all the time. Miro's making that same point right now. You're going to get a recession. They're using the Ukraine war in the buildup with China as well as a way to cushion this recession. As long as you pause and keep hiking over time, it's the only thing that's going to hold this market up until it comes down. So it's just a matter of price where that bottom and that rollover is, and timing of when it happens.
Reaction in the form of matters requiring attention. So I think that was also in the presentation. I think it was to say, yes, this is a bank, and there are many other banks that are experiencing these things, and we're on the case.
Question becomes, does he destroy the economy along the way? And, does he destroy the economy along the way without getting done what he needs to get done? Where you just accept inflation?
Multiple banks by other banks, and I was just curious whether you think that further consolidation in the banking sector would increase or decrease financial stability, and whether you have any concerns about the biggest bank in the U.S. Getting even larger.
So, we certainly don't, and I don't have an agenda to further consolidate banks. Consolidation has been a factor in the U.S. banking industry really since interstate banking, and before that even. It goes back more than 30 years. When I was in the government a while back, I think there were 14,000 banks. Now there are 4,000 and change. So that's going on. I personally have long felt that having small, medium, and large-sized banks is a great part of our banking system. The community banks serve particular customers very well. Regional banks serve very important purposes, and the various kinds of GSIBs do as well. So I think it's healthy to have a range of different kinds of banks doing different things. I think that's a positive thing. Is it a financial? So I would just say, in terms of J.P. Morgan buying First Republic, no,
they ain't done buying.
FDIC really runs the process of closing and selling a closed bank completely. That is their role, so I really don't have a comment on that process. As you know, there's an exception to the deposit cap for a failing bank. So it was legitimate, and I think the FDIC, I believe, is bound by law to take the bid that is the least cost bid. So I would assume that's what they did.
So, but do you have any concerns about the fact that they're getting larger in general?
So I think it's probably good policy that we don't want the largest banks doing big acquisitions. That is the policy, and but this is an exception for a failing bank, and I think it's actually a good outcome for the banking system. It also would have been a good outcome for the banking system had one of the regional banks bought this company, and that could have been the outcome. But ultimately, we have to follow the law in our agencies, and the law is it goes to the least cost bid.
You know, at the end of one of these cycles, you have civil unrest, right? You've got taxing corporations. You've got your local taxes going up. We're seeing all that stuff, right? And then the next thing would be a war, right? Proxy war. They have to keep the Ukraine war going. They have to keep tensions up with China.
Yeah,
Russia and China's probably in on this, knowing the same thing. Keep people working, keeping production numbers high. That keeps GDP. That artificially inflates GDP. Believe it or not. I mean, if they don't get rates above the rate of inflation, what are we doing? Just buying time until you accept inflation.
You know, when banks raise their credit standards, that can also make credit tighter in a kind of broadly similar way. It isn't possible to make a kind of clean translation between one and the other, although firms are trying that, and you know, we're trying it. But ultimately, we have to be honest and humble about our ability to make a precise assessment. So it does complicate the task of achieving, you know, a sufficiently restrictive stance. But I think conceptually, though, we think that interest rates, in principle, we won't have to raise rates quite as high as we would have had this not happened. The extent of that is so hard to predict because we don't know how.
He's getting dovish, man. They're holding him to the coals right now.
How large they'll be and how long they'll take to be transmitted, but that's what we'll be watching carefully to find out.
Just to quickly follow up, what does it?
He's conceding to a point that the bank failures, in some regard, are a concern right now to raising rates.
If it's having some kind of substitute effect.
This is just something that we have to factor in as we want to find ourselves. So I guess I would say it this way: the assessment of the extent to which additional policy firming may be appropriate is going to be an ongoing one, meeting by meeting, and we're going to be looking at the factors that I mentioned that are listed in the statement, the obvious factors. That's the way we're going to be thinking about it, that's really all we can do. As I say, it does complicate. We have, you know, a broad understanding of monetary policy. Credit tightening is a different thing. There's a lot of literature on that, but translating it into rate hikes is uncertain. Let's say it adds even further uncertainty. Nonetheless, we'll be able to see what's happening with credit conditions, what's happening with lending. There's a lot of data on that.
Yeah, I don't know if there's softball questions, Bebop. Most of these questions that I normally see come out are softball until the end. They're asking them some hard questions, I think, from the beginning, right off the bat, man. Not hard, but we want answers.
I was wondering, given your baseline outlook, whether you feel this current rate of 5 to 5.25% is in fact sufficiently restrictive.
Fuck no.
It's going to be an ongoing assessment. We're going to need data to accumulate on that. Not an assessment that we've made. That would mean we think we've reached that point, and I just think it's not possible to say that with confidence now. But nonetheless, you will know that the summary of economic projections from the March meeting showed that at that point in time that the median participant thought that this was the appropriate level of the ultimate high level of rates. We don't know that. We'll revisit that at the June meeting, and that's, you know, we're just going to have to, before we really declare that, I think we're going to have to see data accumulating and you know, make that, as I mentioned, it's an ongoing assessment.
VIX on a 4-trigger cluster right now. You can see that the SPY is just corkscrewing it up over here.
As of the last survey, what did this one show, and how did that weigh into your deliberations?
So we're going to release the results of the sluice on May 8th, in line with our usual time frame. And I would just say that the sluice is broadly consistent when you see it with how we and others have been thinking about the situation and what we're seeing from other sources. You will have seen the Beige Book and listened to the various earnings calls that indicate that mid-sized banks some of them have been tightening their lending standards. Banking data will show that
Fed's on the ropes, man.
But the pace has been slowing really since the second half of last year.
Let's go to Nick.
Nick Timmeros of the Wall Street Journal. Chair Powell, the argument
our boy Nick
last year in the beginning of this year to slow down the pace of increases was to give yourself time to study the effects of those moves. After the bank failures in March, as you've discussed, the Fed staff projected a recession starting later this year. So my question is why it was necessary to raise interest rates today, or put differently, if the whole point of slowing down the pace was to see the effects of your moves, and now you've, for the last 2 meetings, been seeing the effects of those moves, why did the committee feel it was necessary to keep moving?
Well, the reason is that we, again, with our monetary policy, we're trying to reach and then stay at for an extended period, a level of policy stance that's sufficiently restrictive to bring inflation down to 2% over time. And that's what we're trying to do with our tool. I think slowing down was the right move. I think it's enabled us to see more data, and it will continue to do so. So
he's saying we didn't make a decision to pause today, but now we're slowing down. So he's giving like these totally mixed messages here.
Of not doing enough and not getting inflation under control against the risk of maybe slowing down economic activity too much. And we thought that this rate hike, along with the meaningful change in our policy statement, was the right way to balance that.
And just to follow up, what you said in response to Howard's question,
This is definitely not J. Powell, hey, the rates will continue. If you guys watch all these rate decisions, this is not J. Powell Hawk.
Or could it accumulate over a longer period than a 6-week intermeeting cycle?
As I mentioned, I would just say that this assessment will be an ongoing one. You can't, with economic data, you can't. You've seen, take inflation from it. Look back. We've seen inflation come down, move back up 2 or 3 times since March of 2020.
That always happens.
Inflation have a few months of coming down and then come right back up. So I think you're going to want to.
And you're supporting banks, man.
That a few months of data will persuade you that you've got this right, kind of thing. And
what he's not telling you is that if we have any more failures, if we have any commercial real estate failures, it means inflation's going to spike when they bail that out.
You can calculate them many different ways, but one way is to look at the nominal rate and then subtract a reasonable estimate of let's say 1-year inflation, which might be 3%. So you've got 2% real rates. That's meaningfully above what many people anyway, would assess as the neutral rate. So policy is tight, and you see that in.
He knows they've already made a commitment to support the market. We know that. We know that when we have failures, he's going to support it. He knows it too.
If you put the credit tightening on top of that,
he knows the balance sheet's going to grow again.
That's ongoing. I think you feel like we may not be far off, or possibly even at that level.
And he's telling you that basically. Not even basically, he's telling you, we don't know what damage is coming down the road. We can't raise rates right now.
So if the Federal Reserve gets down to the 3% inflation, as the projections show at the end of this year, or close to it, would it be okay for you for a prolonged period of 3% inflation and hoping for some outside event to move down to 2% target?
I think
a lot of put fuel out there right now.
Our target, we're always going to be focusing on getting there.
Would you be okay with a prolonged 3%?
It's. Let me just say that's not what we're looking for. We're looking for inflation going down to 2% over time. I mean, that's not a question that's in front of us, and it would depend on so many other things. But ultimately, we're not looking to get to 3% and then drop our tools. We have a goal of getting to 2%. We think it's going to.
See if you can see liquidity above.
Be a smooth process, and I think we're gonna need to stay at this for a while.
How does the other side of the mandate, the job side, once you get to 3%, going from 3 to 2, how does the other side of the mandate balance?
I think they will both matter equally at that point. Right.
Some down below.
A labor market that's still extraordinarily tight. You've still got 1.6 job openings, even with the lower job openings number, for every unemployed person. We do see
down here
of softening in labor market conditions, but overall, you're near a 50-year low in unemployment. Wages, you all will have seen the wage number from late last week, and it's whenever it was, and it's a couple percentage points above what would be consistent with 2% inflation over time. So we do see some softening. We see new labor supply coming in. These are very positive developments, but the labor market is very, very strong. Whereas inflation is running high, well above our goal. And right now we need to be focusing on bringing inflation down. Fortunately, we've been able to do that so far without unemployment going up.
Matt.
Hi, Chair Powell. Matthew Boesler with Bloomberg News. So many analysts noted at the time of the March FOMC meeting that at least half of Fed officials' projections did imply or seem to imply that a recession was in their baseline forecast as well, given the strong first quarter GDP tracking estimates. And so I'm just wondering if you could kind of elaborate on, why you're optimistic that a recession can be avoided, given that that's the staff's forecast, possibly also the broader committee's forecast as well, and also, of course, most private sector forecasts.
Proxy war.
I don't think
you won't say it though.
It's printed in the summary of economic projections and all that. I don't think you can deduce exactly what you said about what participants think, because you don't know what they were thinking for first quarter GDP at that point. They could have been thinking about a fairly low number. Anyway, in any case, I'll just say I continue to think that it's possible that this time is really different. And the reason is there's just so much excess demand, really, in the labor market. It's interesting, as we've raised rates by 5 percentage points in 14 months, and the unemployment rate is 3.5%, pretty much where it was, even lower than where it was when we started. So job openings are still very, very high. We see by surveys and much evidence that conditions are cooling gradually, but it really is different. It wasn't supposed to be possible for job openings to decline by as much as they've declined without unemployment going up. Well, that's what we've seen. So there are no promises in this, but it just seems that to me that it's possible that we can continue to have a cooling in the labor market without having the big increases in unemployment that have gone with many, prior episodes. Now, that would be against history. I fully appreciate that. That would be against the pattern. But I do think that
he knows what this time is different means.
So much excess demand. Yet, wages have been moving down. Wage increases.
You get like someone breaks into his phone or something, and you just see in his phone, buy 0-date puts today.
I think
buy a 300-pack of 0-date puts.
of avoiding a recession is, in my view, more likely than that of having a recession. But it's not that the case of having a recession is. I don't rule that out either. It's possible that we will have what I hope would be a mild recession.
The committee also noted in March that wage growth was still well above levels that would be consistent with 2% inflation. Do you see that as well? And could you kind of explain, how you come to that judgment?
Sure. So we look at a range of wage measures, and then that's a nominal, and then so you assume wages
still have a bull cross on the 5-minute. Price is above the. Have a bull cross on the 5-minute still. Price is still sitting above right now. I want you to see that white and red line right now. We still have this bull cross right back here at 1 p.m. that has not resolved to the upside yet. So I want you to be aware of that right here, okay? Just so you can see it, there is a bull cross. Price right now is above 412.08, grinding higher.
Long expansions where they do go down, where labor gets a bigger share toward later in a recession. Later in an expansion. So yeah, and we calculate those, and you have to take the precision with a degree of salt. But I would say that what they will show is that if wages are running at 5%, 3% is closer to where they need to be. Wage increases closer to 3%, roughly, is what it would take to be consistent with inflation over a longer period of time.
2 days ago, 2 or 3 sessions ago, we had a conversation here about Theta Gang winning the week, right?
Inflation. You're asking a very specific question. I think there are many things. I think wages and prices tend to move together, and it's very hard to say what's causing what. But I've never said that wages are really the principal driver, because I don't think that's really right.
Great. Chris Rugaber at Associated Press. Well, you mentioned profit margins. Those have expanded, did expand sharply during this inflationary period. And while they are
this corporate greed talk.
To decline, many economists note they haven't fallen as much as might be expected, given that we're seeing at least some pullback among consumer spending. So
because we have tax corporations.
The expanded profit margins as a driver of higher prices? And if so, would you expect them to narrow soon and contribute to reduced inflation in the coming months?
So higher profits and higher margins are what happens when you have an imbalance between supply and demand. Too much demand, not enough supply. And we've been in a situation in parts of the economy.
Not in this situation.
Where supply has been fixed or not flexible enough. And so, you know, the way the market clears is through higher prices. So to get, I think as goods pipelines have gotten, you know, back to normal so that we don't have the long waits and the shortages and that kind of thing, I think you will see inflation come down, and you'll see corporate margins.
I posted a post on FinTwit, I think on yesterday, the day before, about corporate greed right now.
Demand, and then you're really back to full competition. That would be the dynamic I would expect.
And not supply shortages.
Michael McKee from Bloomberg Radio. And
we have manufactured supply shortages right now.
Something about what your policy reaction function is, your policy framework is going forward. When you look at the economy at the next meeting, are you looking at incoming data, which is by definition backward looking? Are you going to be forecasting what you think is going to happen? Are you ruling out the rate cuts that the market has priced in?
I didn't catch the last part. Rolling.
Markets have priced in rate cuts by the end of the year. Do you rule that out?
Okay, I got it. So what are we looking at? I mean, we look at a combination of data and forecasts. Of course, the whole idea is to create a good forecast based on what you see in the data. So we're always looking at both, you know, and it will, of course, it'll be the obvious things. It'll be readings on inflation. It'll be readings on wages, on economic growth, on the labor market, and all of those many things. I think a particular focus for us going now over the past 6-7 weeks now, and going forward is going to be what's happening with credit tightening. Are small and medium-sized banks tightening credit standards, and is that having an effect on loans, on lending? And you know, so we can begin to assess how that fits in with monetary policy. That'll be an important thing. I just, you know, we'll be looking at
VIX rolling over right now.
And I would just point out we've raised
vol coming off the events in the background. Be warned. If you're bearish right here, be careful.
We have credit conditions tightening, not just in the normal way, but perhaps a little bit more due to what's happened. And we have to factor all of that in and make our assessment of you know, of whether our policy stance is sufficiently restrictive. And we have to do that in a world where policy works with long and variable lags.
Warning the sell side right now.
You know, we will make our best assessment, and that's what we'll be thinking.
What about the idea of rate cuts?
Yeah, so we on the committee have a view that inflation is going to come down, not so quickly, but it'll take some time. And in that world, if that forecast is broadly right, it would not be appropriate and to cut rates, and we won't cut rates. If you have a different forecast, and you know, markets have been from time to time pricing in, you know, quite rapid reductions in inflation. You know, we'd factor that in, but that's not our forecast. And of course, the history of the last 2 years has been very much that inflation moves down. Particularly now, if you look at non-housing services. It really hasn't moved much, and it's quite stable. And you know, so we think we'll have to demand
1 in 5 minute crossing the hourly on VIX right now.
Conditions may have to soften a bit more to begin to see progress there. And again, in that world, it wouldn't be appropriate for us to cut rates.
Courtney?
What a stark difference from his previous presser, man. It was full steam ahead on rate increases.
Facility in the context of the current banking stress. Do you think it's contributing to the stress by making it more attractive for money market funds to compete with banks for deposits? And did the committee discuss any changes to the structure of the facility, or do you see that being put on the table in the future? Thanks.
Sure. So we looked at that very carefully, as you would imagine, and you know, it's really not contributing, we don't think now. It hasn't actually been growing. It moved up, it moved down, and then moved back up to where it was. What happened in the when there were the big deposit flows, which by the way have really stabilized now, what happened was institutional investors took their uninsured deposits and put them in government money market funds, which bought paper from the Federal Home Loan Banks and things like that. Over the course of maybe the last year, retail investors had been gradually, as they do in every tightening cycle, they've been gradually moving their deposits into higher yielding places such as CDs and other things, including money market funds. So that's a gradual process that is quite natural and happens during a tightening cycle. What was unusual really was the institutional investors moving their uninsured deposits and spreading them around and things like that. But it doesn't seem to have had any effect overall on the overnight repo facility. That is really there to help us keep rates where they're supposed to be, and it's serving that purpose very well.
Sarah.
You can see that his stomach is upset right now too. He's like burping and stuff.
For a moment, I know you talked about that in terms of fiscal policy, but can you just speak towards what the impact of a default would mean for Americans across the country, the markets, and borrowing?
Yeah, I would just say it's. I don't really think we should be. We shouldn't even be talking about a world in which the U.S. doesn't pay its bills. It's just.
That's right, Jay.
Be a thing, and again, I would just say we don't. No one should assume that the Fed can do. Can really protect the economy and the financial system and our reputation globally from the damage that such an event might inflict.
It's pure stupidity to be having the discussion.
Thanks, Mr. Chairman. Scott Horsley from NPR. In his report last week, Vice Chair Barr identified a couple of the factors that he thought contributed to the regulatory, the supervisory lapses at Silicon Valley Bank. A policy change in 2019 to exempt all but the biggest banks from strict scrutiny, and also what he called a sort of cultural shift towards less aggressive oversight. You were here in 2019. Do you share that view, and what would it take to get...
SPY retesting the lows right now, 410.23.
He said in your release would be necessary.
So I didn't take part in creating the report or doing the work, but I have read it, of course, and I find it persuasive. I mean, I would say it this way: a large bank, not a very large bank, a large bank failed quite suddenly and unexpectedly in a way that threatened to spread contagion into the financial system. I think the only thing that I'm really focused on is to understand what went wrong, what happened, and identify what we need to do to address that. Some of that is, it may just have been technology evolving, we have to keep up with all that, but some of it may be our policies and supervisory and regulatory, whatever. Well, what our job is now is identify those things and implement them. And that's kind of the only thing I care about is, and I feel like I am accountable for doing everything I can to make sure that that happens.
Thank you. Evan Reiser with MNI Market News. Chair Powell, are we in the early stage or nearing the end stage of the banking turmoil among regional banks? And secondly, do you still have a bias to tighten rates? Is that what the statement is saying?
So, I guess I would say it this way.
I'm long 412 C's for 5-5.
From the very beginning, that we're at the heart of the stress that we saw in early March, the severe period of stress. Those have now all been resolved, and all
May 5th
have been protected. I think that the resolution and sale of First Republic kind of draws a line under that period of, is an important step toward drawing a line under that period of severe stress, okay? I also think we are very focused on what's happening with credit availability, particularly, with what you saw in the beige book, and you will see in the sluice is small and medium-sized, small and medium-sized banks who are feeling that they need to tighten credit standards, build liquidity. What's going to be the macroeconomic effect of that? More broadly,
watch that liquidity down below down here. Should still go down here.
and we'll factor that assessment into our decisions in an important way going forward.
Greg?
Thank you, Fed Chairman. Greg Robb from Market Watch. I just wondered if you've done any reflection on your own actions during this crisis and leading up to it over the last, since you've been Fed Chairman. I think I've heard you say a couple of times that you deferred to the Vice Chair for supervision. Do you think that was the right way to go about this? And yeah, comments on that. Thank you.
Sure. So let me say, first of all, I've been chair of the board for 5+ years now, and I fully recognize that we made mistakes. I think we've learned some new things as well, and we need to do better. And as I mentioned, I thought the report was unflinching and appropriately so. I welcome it, and I agree with and will support those recommendations, and I do feel that I'm personally accountable to do what I can to foster measures that will address the problems. So on the Vice Chair for supervision, the place to start is this.
We'll look below here and see if there's more liquidity below this level here.
It says, shall deploy policy recommendations, develop policy recommendations for the board regarding supervision and
Looks like there's a little bit more down below.
And shall
right there's some coming into the market
of such firms. So this is Congress establishing a 4-year term for someone else on the board, not the chair, as Vice Chair for supervision, who really gets to set the agenda for supervision and regulation for the Board of Governors. Congress wanted that.
PT2 down here, PT1 right there.
For developing that agenda. So the way it works, the way it has worked in practice for me is I've had a good working relationship. I give my counsel, my input privately, and that's, I offer that, and I have good conversations, and I try to contribute constructively. I respect the authority that Congress has deferred on that person, including working with Vice Chair Barr and his predecessor. And I think that's the way it's supposed to work, and that's appropriate. I believe that's what the law requires, and but it isn't. I wouldn't say it's a matter of complete deference. It's more, I have a role in presenting my views and discussing, having an intelligent discussion about what's going on and why, and that's my input. But ultimately, that person does get to set the agenda and gets to take things to the Board of Governors, and really in supervision has sole authority over supervision.
Just wondered if you had any regrets, or was there anything that, decisions that maybe you regret now in light of what's happened?
I've had a few. Sure. I mean, who doesn't look back and think that you could have done things differently? But honestly, you don't get to do that. Again, my focus is on control the controllable. As one of my great mentors used to always say, control the controllable. What we control now is make a fair assessment, learn the right lessons, figure out what the fixes are, and implement them. And I think that Vice Chair Barr's report is an excellent first step in that, but we've got to follow through.
Hi there, Megan Casella with Barron's. Did the possibility of pausing at this meeting come up at all, and how seriously was that considered? I'm curious if you can give us any color as to whether there were any initial concerns about raising rates again, or what those discussions entailed.
So support for the 25 basis point rate increase was very strong across the board.
Will I hold my calls past today? Yes.
I would say there are a number of people, and you'll see this in the minutes. I don't want to try to do the head count.
We have expected range expansion coming into the fourth on the expiry on May 4th.
That there's a sense that we're
looking for a 1.1% move.
As I mentioned,
on the 4th, and then into the 5th, I think it's even higher.
We feel like we're getting close, or maybe even there. But that, again, that's going to be an ongoing assessment, and we're going to be looking at those factors that we listed in to determine whether there's more to do.
I'm curious too how to interpret that and the changes to the statement. Is the bar higher now to raise rates at the next meeting, or would a strong jobs report or inflation print be enough to push the Fed to tighten again?
I don't want to. I couldn't really say.
They're not tightening, man, until September.
Look, I think we've moved a long way fairly quickly. And I think we can afford to.
He just doesn't want to say it. He's trying to temper the market reaction right now.
And we'll go to Nancy for the last question.
Last question.
Hi, Chair Powell. Nancy Marshall-Genzer with Marketplace. You mentioned a few times about the lessons you learned from the banking crisis, that you would learn the right lessons. What are those lessons?
Well, I just would start with something that's changed, really, which is the run on Silicon Valley Bank was out of keeping with the speed of runs through history. And that now needs to be reflected in some way in regulation and in supervision. We know now that we know it's possible. I think
this is the last question.
Possible. No one I'm not aware of anybody thinking that this could happen quite so quickly. So I think that that will play through.
I think that's what I heard.
It will be up to Vice Chair Barr to really take the lead in designing the ways to address that. But I think that's one thing. I guess I would just say that then that we're gonna revisit. It's pretty clear we need, to me anyway, it's clear that we need to strengthen both supervision and regulations for banks of this size, and I'm thinking that we're on track to do that as well.
Can you be any more specific on stress testing or looking at banks that have specific concentrations?
You can't stress test a fucking bank run. What the fuck?
Barr's role really is, and he'll take the lead on that.
Okay, thank you.
Thank you.
All right, that's it. Presser over. Let's discuss it real quick, I guess. I'll look inside the chat logs and see what you guys are asking. If you guys have any questions or comments, make them known inside the chat so we can discuss them before the end of the day. Presser is over. Initial takeaways, we know that we got 25 BPS. It does look like they're pausing for the summer at least. I don't see how they're going to raise rates this summer, or I don't see it. So he's saying, he did say though that we have not paused rates, and out of one mouth he said we have not paused rates, but then out of the other mouth he did say we paused rates. So mixed messages from Jerome Powell right now. That is it's not what his previous pressers have been, nor statements. So you're not getting hawk Powell, no matter what you think or say, whatever you have to say about it. There's no hawk. That's like middle of the road dovish. We talked about a rating of 1 to 10, 1 being like super hawk and 10 being super bull or super dove. He's probably a 6 right here. I'd call it a 6 or a 7. It seems like initial impression, he doesn't want to ruin. He's being very tactful in his answers. I know that someone commented earlier those are softball questions. I think they're always softball. Those questions specifically were a little bit more poignant from the get-go than I usually see. And you could see that he was uncomfortable as well. I think that he doesn't want to be committed to any, or like, I don't know, just like dodging and weaving. That's not the normal J. Powell presser they've come to expect, right? In either way, being hawk or bull, he was very uncommitted across the board, in my view, at this point. Trading 409.10 right now. You can see right here, you've got this liquidity showed up down below earlier. Right down here, there's some more liquidity showing up even below that. That red bar is that red bar below is this one right here is the gap that we left down below at 406, 405, and that's showing itself right here. Can the sell side fill this gap down below or not? We'll find out. I bought some calls for Friday, so if I have to add to them, I'll add to them. But here or here, the selling, in my view, is over at this point. So whether we tag this or tag this, I don't care. I don't see any kind of like reason for us to trade below 405 or where we are right here, 409, any of that kind of stuff. Volatility over in my view at this point. So I want to see us at least trade up and then maybe sell off later on. I want to see volatility get killed and murdered into tomorrow. If you guys have a different take on this, maybe there's some kind of like hawkishness in that statement. that I don't see, say something in the chat, because if I was looking for hawkishness for me to be looking for hawkishness from him, I was looking for J Powell to be like, I want to see well, we haven't even talked about the options market, but we almost tagged the upper side here, but not quite. We did tag the lower side down here, the anticipated moves. So we're kind of close right now into this close to the options market at least. But if you think it was hawkish, I mean, for hawkish for me from the Fed or from Jerome Powell today, it would have been 25 BPS, and then we're not talking about a pause. Like we've had previous rate releases or rate decisions where it's been like we don't know what's happening, and then one question comes out and says, "Are we done raising rates?" And he's like, "Fuck no!" And today he did not say that. He did not say. He was like, maybe we'll wait and see. So in my view, we did not get super hawk J Powell, and I even think to an extent I think even in his back of his mind, he's like, is this the last time? I think he's acknowledging that it's possible this is the last rate hike we ever do. I don't think that's the case. I don't think that's the right thing to do. I'm on Team Bear on this. I want to see inflation come down. I want to see us get above the rate of inflation. The Bears need some stuff. Like Bears need, for volatility, Bears need the debt ceiling bullshit. Bears need the war to end. They need some kind of reconciliation with China. They need rate increases above the rate of inflation. They need all this stuff, or a rate cut, an actual rate cut, like that we've broken something. We've actually broken something. So I don't know, man. There's going to be a lot of people out there that are going to want to put some risk on. If there are people out there that have money in, and he was talking about people with their money, putting their money in money markets and savings accounts and all this kind of stuff. People are going to want to put risk on. They're going to want to outrun this inflation. And the other side of this is we know that they showed their cards. We know that the Fed showed their cards when we had regional bank financial crisis. We know we've got others coming up. You know that he knows that he has more of this coming down the pike, and if he continues to raise rates aggressively, that this shit's going to show up, and he's going to have nothing to. It's like we're over tightening, and he's not going to tell you why, and that's because he knows that we've got more crises coming down the road, and that they're going to have to support. And what is that going to do? It's going to raise inflation again. We know that it is. We know the balance sheet's going to go up. He's really on the fence, man. He was on the ropes today. He's on the ropes. The Fed's on the ropes. Fed's definitely on the ropes in this one. Yeah, it's tough, man. He's in a tough place. You could see it. He was like you know that burp that you get when you're under high stress, and I don't know what it's called, like you need Pepsid AC and shit. You need to like take a Tums because you're like I don't want to be here anymore. Like I don't want to answer these fucking questions, and I don't want them to pin me. And he was dodging and weaving. He was definitely dodging and weaving. So not what Jim Cramer was saying. Maybe Jim Cramer is implying that there'll be a mad rush into the market. Maybe J Powell sees something we don't see that's going to temper this. He was not as hawkish as they expected. So maybe he knows something that we don't know that's going to temper the market on its own. I guess that's a possibility. There's something material in the market that we don't see that he already knows about happening because you're expecting him. There were pleas. Timros in his last article, not today's, but a couple days ago, was quoting funds, the heads of hedge funds saying, please be more hawkish in your statement. My calls are doing fine. I'm in calls for Friday. I'm in 412s right now. Yeah, he had a PTON session. No, I think that, I don't know, it's that he wants to do more. It's that, he has to come out and do these things, and he knows that if he says, he can't say a lot of stuff, and he can't say, yeah, we're going to keep tightening. He knows that he can't here. He knows that he can't. The more like transparent Fed you're getting. I think John Haggerty said that earlier. More transparent Fed, and you're like relying upon Yellen now to come out and try to scare the market. So is either something that we're not seeing? Yeah, it's got to be something that we don't see that he knows will temper the market. And there's nothing else I can say on this. Yeah, this is definitely a pause, man. You're not gonna. I don't think you're gonna see rate cuts through the summer or rate increases through the summer. I think we're done with rate increases right now. Do any of you out there thinking? Do any of you think we're getting another rate increase in the next month or two, 3 months? Anyone think that? I'm wondering if you think that if that's going to happen or not. Yeah, Jimmy Barry thinks so. He thinks we're Jimmy. You think we're going to get more rate increases? I think we're done. Yeah, I don't see rate increases. I'm not seeing them. I think we're done until fall. I think like in September, October, we'll get that huge panic with that rate increases. We're seasonally already weak. I think that's what you're going to see. That's a fair point. Nick's making a really good point. He's saying if they can get with the 5 largest banks, and they're assured the mid-level and small banks will be bought up, you're damn right we'll have increases. I think they're scared about other failures. That's what I think. I think they're waiting for the other shoe to drop on commercial real estate. I think that's like a big lingering unknown. Like so you've got like a regional bank owner, right? A CEO, and he's like, can I get a handout? And they got a handout. And now if I was a big commercial real estate baron, I'd be like, well, shit, can I get a handout? Like, give me a handout. BlackRock's probably like, I want to buy a bunch of that commercial real estate on discount for $1. Let's raid the hen house while we can. Yeah, I'm serious. When I look at the regional banks, I'm like, what other large entities out there are just gunning to like find a regional mid-sized, like legitimate mid-sized conglomerate to just take over and raid? Looks like it's corporate raiding season, but on a much bigger scale, like a larger scale. Trading PT1 right now. So what I'm going to do is I'm going to leave the stream up. I'm going to take the rest of the day off here. I'm going to leave the stream up for you guys. At this point, I want to first say thank you very much for joining me today on the live stream. Please like and subscribe to these videos. I'll be back here again tomorrow morning, 9:30 with you. Showed up a little early this morning, so I'm going to take some time off here for the rest of the afternoon, crack a beer. If I crack a beer and come back into the office, maybe I'll drink a beer with you guys or something. If you guys want an outlook for the rest of the week, let's look at the 5-minute chart here. Oh, yeah, baby. Blood in the SPY right now. Right down in here just so you can see it. Hold on here. Let me mute this. Hold on a second here. Blood in the SPY down here. Got this beautiful gap to fill down below at this PT2. Beautiful gap to fill down below at 405.48, 406.01 right here. We know we have demand down here. We have previous demand down here. We know we had demand here. We know we had demand right here. We'll see if this demand comes right back up and buys all this up for Friday. If they don't buy PT2, Not good. You're looking at 400, another 50 points lower if we get below this PT2 right now. So any opportunity for me to buy this? I own some calls for Friday. I'm going to try to get some more here into the close. So any kind of more selling down here I can get, going to keep adding for Friday. Just another opportunity to buy the dip. Let's look at a 15-minute here too. Right there, baby. Just another beautiful rotation trade. Let me show it to you in the 15-minute. Just right in here. This dip just keeps getting bought, right? Boom, buy the dip. Boom, buy the dip. Right in here. Boom, buy the dip. And I'm looking for that dip buy right down in here for Friday. Whoop. For a couple days. At least a couple days. I might have to get some fucking calls for like 2 weeks from now too. Right there, baby. PT2. So let me make this prettier for you. There's PT2. There's S1. Breakthrough PT1 right here. Don't become the hole. The one warning I'm going to give you is do not become the hole overnight. I'm going to give you a warning if you're a bear. Do not become the hole. Just added to my position once more. Just threw another 10 on there. Now I've got 20 contracts for Friday. So if this goes down into 330 right here, I'll grab more for Friday right down here. Another opportunity to buy the dip going all the way back into March. I'll see you. I'm going to go get a beer. I'll be right back. Give me it's 3:30 right now. If I come back and I'll drink the beer with you at between 3:45 and 4 p.m. So I'm going to put that up for you right there. And I'll be right back. I'm going to grab a beer. You guys grab a beer, grab a whiskey or something. I'll see you guys in just a minute. All right, so I'm going to stop check in with you guys under this close right now. Sorry, I was on the phone with your wife's boyfriend. So just into this close right here, just added to my position again for Friday. There is some concern here. There was a few things to think about here. Can we get continuation in the after hours? We haven't seen that of late. We haven't seen like chasing the hole. We did see it one day this week where futures market was able to sell us down into the open the following day. Apple has more down that it can go. We've traded up Apple into their ER. Tomorrow we have Apple after the bell. Even if Apple has a good ER, we'll likely sell it unless they announce something that we don't see. So there is an argument to be made for continued selling an Apple into their ER tomorrow after the close. But myself, I've got a 30-pack for Friday on. I've got 412Cs right now for Friday. I'm not chasing this hole down or anything like that. I've got no interest. Right now, I haven't had any interest in selling into the following day on futures. It hasn't been paying off well. So for myself, I'm long into Friday. There is an argument though to be made for the run up into Apple to be done. If you're an Apple bull, you can't get just a good report or a good guidance. You have to get something that we haven't seen, like an Apple car or something like that. Normally, you don't actually get anything better than that. Throwing my hair all over the place. Hair's all fucked up with my headphones. So for myself, at least, heading into tomorrow, I'm not looking for too much more. Maybe you get down to this PT down here, 405, 406, something like that. Now, I have talked to you guys in the past about selling May 3rd to May 5th. So just note that unless you get some special news from Apple, I'm going to expect this to be the peak of the S&P 500 and for a roll to come into play into the market between now and the next couple weeks. So we'll get a rotation out of the S&P 500. We should hopefully we can get 396 or 400 heading into the next couple weeks here and get some relief and rotation so we can come back up, like market breadth to come down at some point. So between now and the next couple weeks, we know that May 5th was like the target date for the market to begin to roll over. And if they're going to front run it, maybe they'll front run it now. If they don't front run it, we will have to wait until the 5th or Monday at the latest. We've already talked about put spreads 2 to 3 weeks out, 4 weeks out. If you're not positioned for that, try to get positioned for that between now and Friday, or at least Thursday after the close, something like that, after Apple reports, if they have a great report or something like that.